Okay, good morning. It's 11 o'clock. We can start. Welcome to weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Today's topic is basics of FEMA, capital and current account transactions. After long we are doing this webinar, I will say many years. And honestly, this was missed and many participants were requesting, why can't you have it on FEMA? So today, that's why we are having, but today, 1 day session only we have kept. It is not series. And we are just talking of basics of FEMA on capital and current account transaction both. Though as a CS in corporate or in practice, we deal with more with capital account transactions, but we are covering basics. So we will cover current account transactions as well. And today's our presenter is Mr. Farooq Umrigar and Ms. Sejal. And today's our panelist is Mr. Narendra Kumar Madlani. To formally introduce Mr. Narendra Kumar Madlani. Mr. Narendra Kumar Madlani is the principal partner of Naren and Company Chartered Accountants, a professional service firm established in 1987. A CA with over 3 decades of experience, he specializes in FEMA, international taxation, and cross-border transaction advisory. He has advised wide range of domestic international clients on structuring of inbound and outbound investment, FDI, ODI, exchange control regulations, and international tax matters. His advisory approach combines a deep understanding of commercial objectives with extensive experience in regulatory compliance, risk management, and tax-efficient transaction structure. Mr. Madlani's key area of expertise include FEMA advisory, international taxation, double taxation avoidance agreement, GAR and POEM implications, and strategic tax and compliance advisory for resident and non-resident entities. Over the course of his career, he has successfully guided hundreds of clients through complex cross-border transactions and regulatory frameworks. He is also a recognized contributor to the profession, having co-authored the FEMA references published by the ICAI, including its revised edition. He held leadership roles within FEMA Study Circle of BCA Society and has been frequent speaker at professional forum organized by BCA, the Western India Regional Council, and the ICSI on topics relating to FEMA and international taxation. Welcome, Mr. Naren. Thanks a lot for your time.
Yeah, okay, thank you.
Today's presenter to be introduced, Ms. Sejal Gerardi, but she says Ms. Sejal only, J, is an associate member of ICSI and law graduate from Mumbai University with over 3 decades of experience in financial and banking compliance, company secretarial, and legal functions. She has worked with Wells Fargo Bank for last 13 years with last position as Executive Director, International Compliance, and Boeing as a Head Compliance, AML Officer, and Company Secretary for over 8 years, apart from other companies like GE Capital and Tata American Express. She being proven expertise in establishing maiden branch of foreign bank in India, including setting up its governance framework, committee structures, policy management, regulatory reporting database, and conflict management procedures across bank and BFC and merchant banking activities. Organizing and establishing International Compliance Department, overseeing compliance risk management responsibilities spanning across APEC, Canada, and Latin region, including regulatory change management, policy management, control room oversight for personal account dealings outside business activities, gift and hospitality pre-clearance, compliance risk assessment, risk and control self-assessment. Overseeing compliance responsibilities of global capability centers and helping them navigate complex regulatory landscape. Designing and executing regulatory compliance remediation deliverables and managing regulatory interface with India and US regulation, RBI, SEBI, and US regulations. Our other presenter is Farooq, engineer, and our other panelist is Mr. Farooq is specialized in banking regulation, has a vast experience in FEMA. He has 30 plus experience in banking, compliance, finance, accountancy, trade and cash product management, banking operation, banking automation in India and abroad. He has worked with banks like ABN AMRO, Royal Bank of Scotland, PLC Development Bank of Singapore, Axis Bank, Deutsche Bank of Muscat, and MUFG Bank Limited in various capacities. He has held different positions as a head of GTS, head of trade finance product and operations, cash management product operations, structure finance compliance, head of NBFC compliance, head of controls and audit, head of testing monitoring in India and overseas. Mr. Farooq has been hands in reviewing operational process, identifying areas of improvement, risk bringing operational efficiency to process changes and Mr. Farooq and Ms. Sejal both are part of Meta and Meta. Thanks a lot. As usual, our moderator is Mr. Bala, no introduction required, and our chief consultant, Mr. Sudhakar Saraswatullah. Welcome all. We thank all our panelists today's webinar for joining us on our knowledge sharing journey on behalf of entire team of Meta and Meta. I'll not take much time. I'll request Mr. Naren to say a few words on the topic, and then Sudhakar and Mr. Bala for 2 minutes, and then you can start the presentation. Over to Mr. Naren Kumar.
Yeah, see, today we'll be covering current account and capital account transactions under FEMA, as well as the residential status of a person who undertakes any cross-border transaction. Because in order to decide the applicability of the FEMA law, first thing we have to ascertain is whether it is a current account transaction or capital account, and then we have to see whether the person who undertakes the transaction is a resident or non-resident. Once we have categorized this, then we can apply the FEMA very easily. Now I request the presenter to start the presentation.
Thank you. Thank you.
Over to Sudhakar, please.
Yeah, good morning, everyone. In fact, as Deepti rightly mentioned, that both current account and capital account transactions is a very vast subject, and there are various segments on there, both in current as well as capital account transactions. And we have to actually have a masterclass on this FEMA, having FDI, ODI, ECB in the capital account transactions, as well as import exports and other related revenue expenditure as far as the current account is concerned, which we will be doing it in the coming webinars. And I request Ms. Sejal as well as Mr. Farooq to kindly plan out for that. Because next week onwards, we are starting a masterclass on insider trading regulations, which will take about 4 or 5 weeks for that. And after that, we may plan a masterclass on ESOPs. Thereafter, we can have a masterclass on FEMA. So maybe in a couple of months, if you can get up for that, we can have that thing. Coming back to the current account and capital account transactions, my experience with RBI as a regulator is a very straightforward regulator and a very simple regulator, according to me. Because there is, if you see the regulations, FEMA regulations, there is not much complexities are involved. Unlike your SEBI regulations, everything is complication and everything is a complexity. You need to interpret that and all. To a large extent, according to me, as far as FEMA regulations are concerned, that complexity is not there. And similarly, to the extent of whatever my modest dealings with RBI is concerned, I never faced any kind of problems. Like to a large extent, we have certain complexities with stock exchanges, with SEBI, with MCA and other things. So I give a pause here and request Bala to take it forward. And during the presentation of Sejal and Mr. Farooq, we will pitch in wherever it is required. Thank you.
Good morning to all of you. I had a great pleasure in welcoming you all on my own behalf and also on behalf of Meta and Meta. As our Sudhakar and our expert panelist said, the capital account transaction, current transaction, although it appears to be very simple, but if we put it in the chartered accountant's language, they will simply say whatever pertaining to P&L account will actually go to the current account. Whatever pertaining to balance sheet will go to the capital account. That's a very simplest way the chartered accountant will say. But however, from the professional point of view, complying with the requirements and looking into the things, although the FEMA is very simple, RBI is a friendly regulator who is always, helpful whenever we go and other things and all. Even on their own also they seek and they provide a clarification. But yet there are a lot of nitty-gritties. Because simply we think any transaction between, what happened resident to resident seems to be not a foreign transaction. Or similarly, non-resident is not a foreign transaction, which is not so. Because our panelist has brought it with Naren, very, very vital point, residential status. That is one thing. Because, by virtue of the income tax 180 days, if you are there, your status becomes non-resident from resident. Although you are from India, once you become a non-resident, the transaction becomes between Indian resident to the NRI, non-resident. So that is what it happened. That is main thing. And second thing is there again, nature of the transaction. Nature of the transaction, you may have this with the same party, multiple transaction, something will be current, something will be capital, how to distinguish, how to go about it. That is another integrity which is there. And the third thing is there, again, what is the subject matter of the transaction? Because the subject matter of the transaction, that is where it is actually situated. For example, a resident to resident is transferring a property, immovable property. The question arises, where is the immovable property situated? It is situated within India or it is situated abroad? So that is the question which arises. That also will determine. So it is not that simple that saying that, it is all very simple, we can comply with it, but there are a lot of nitty-gritty. That is why we have to understand how to distinguish, how to go about it, how to ensure the compliances. I think our presenter will take us through and we'll have the advantage of Mr. Naren, who is having a hand-on experience dealing with the RBI, how the matters are looked into and other thing and all. If some non-compliances happen, how to go about it and other things and all. Because I also dealt with RBI many issues. Yes, they are very good, they are friendly. But the thing is, again, the intention, the way in which it is done, and how you actually present the thing to them with reference to the evidence which you have created, all the things actually go in a very long way. I give a stop here. I'll ask our presenter to take the presentation and move forward. And I will request all the participants, as usual, put their queries and questions on the chat box. We'll be taking on and off as the presentation goes on. Then, subject to availability of the time, we may permit you raise your hands. You can talk and interact with the panelists at the end of the session. And I would also like to register a disclaimer here. This is only a knowledge sharing session, interpreting the law, understanding the thing, looking into the various nitty-gritties. This is not the forum for seeking any particular opinion for a particular case based in the subject matter. Please avoid doing that. If you have any particular issue, etc., you have to consult an expert. This is not a forum for seeking an opinion. Let me make that disclaimer here on behalf of Mehta. Thank you.
Thank you. Sajid and Mr. Farooq, you can start.
Sure. Thank you, everyone, and good morning to you all. Happy Saturday. It is a pleasure to welcome you all to today's session on one of the most fundamental concepts under FEMA, the distinction between capital account transactions and current account transactions. This distinction is much more than a legal classification. It determines basically the regulatory framework applicable to a transaction, the approvals that may be required, the reporting obligations, the consequences of non-compliance. Whether dealing with foreign investments, overseas borrowings, remittances, import, export of payments for services, or understanding the distinction is very, very essential when it comes to business professionals and we as compliance officers. So during this presentation, we will explore the statutory definition of both these concepts, capital account transaction and current account transactions as it stands in FEMA, understand the practical differences between the two, giving real life examples, and discuss the regulatory approach adopted by Reserve Bank of India. And also, we'll touch upon the key challenges which are being faced currently by many of the organizations. By the end of this session, we hope that you will be able to get a clear understanding of how to identify a transaction correctly, appreciate the rationale behind the FEMA regulatory framework, why this distinction is being made, and apply these principles in your practice, in your day-to-day working. With that, let us begin the understanding of the objective of FEMA and why the distinction between current account and capital account transaction lies at the heart of India's foreign exchange management regime.
You have to put a slide in the presentation mode. Currently, it is not appearing in the presentation mode.
Oh, it is in presentation mode only.
No, you actually not put, you only open the slide because the side I can see the running slide. You have to put it actually slide show.
It is
The slideshow
in slideshow only. Now, can you click on that? Now?
Yeah,
Yeah.
now it is perfect. Now it is perfect.
Yeah, yeah.
Okay.
Yes. Okay.
Yeah.
Okay. Moving on to the next slide. Next slide, please. Let me start with what we want to achieve in the next 60 to 75 minutes. First, we want to build a basic understanding but solid understanding of FEMA's framework for cross-border transactions. Though this is not the entire law, this is just a part of it that we will be using and we generally use in our day-to-days. Secondly, we want to clearly define what transactions under FEMA are treated as capital account and what are treated as current account transaction and how the regulator look at them. And third, highlight the differences in the regulatory treatment, what that means for businesses, individuals, approval limits, and documentation. We'll use simple real-life examples as we go through the other slides so that we can relate to our own transactions and day-to-days. Moving on to the next slide. This slide, we just put it just to give a kind of a backdrop of how the FEMA originated. It replaced the FERA in 1973 and FEMA was taken into effect in 2000. FERA was a criminal law style statute, whereas FEMA is designed as a management and facilitation law. Under FEMA, the objective is to facilitate external trade and payments and ensure an orderly forex market and not to block genuine transactions. That is the key objective. Earlier, the FERA regime was mainly a kind of a criminal law regime where things were looked at very negatively. A core design feature is the split between capital account and current account transactions. Everything we do in forex will have to fall in one of the two buckets. With that, I will request my colleague Farooq ji to explain the legal concept of capital account, current account, the difference, and how the practical aspect of dealing with this is generally taken into account.
Just before Mr. Farooq came, I used to say that in case of FERA and FEMA, the primary difference is Foreign Exchange Regulation Act was the old one, where the foreign exchange was regulated. Whereas in the present one, which is FEMA, foreign exchange is being managed. So the regulation at that point of time, it was virtually scary. In fact, when I was a student, that we used to say that FERA is a very scary subject. In fact, it was I was so scared in my exams. Also, I left that in the optional question. I never read FERA as such, but fortunately, by the time I was to deal with, it was replaced by FEMA. Yeah, just I thought, and I will just share with that.
Yes. No, absolutely a valid point, sir.
Yeah, so thank you, Sejal, for that overview. Now we will try to cover up some definitions, and that's the reason probably I may go a little slow so that everything gets registered in the audience's mind. So please bear with me in case I'm a little slow, but that is with purpose. So let's start with capital account transactions from a legal standpoint. FEMA states a capital account transaction is one which alters the assets or liabilities, including contingent liabilities, of a person resident in India, outside India, or of a person resident outside India, in India. So, in simple language, if the transaction creates, changes, or extinguishes an asset or a liability across borders, equity, loans, deposits, property, it is a capital account transaction. Now, because these impact the country's capital stock and external debt, they are generally regulated and only allowed as per specific regulations or permissions. That's why we have the golden rule on this slide. Capital account transaction is prohibited unless specifically permitted. Practically think of capital account as dealing with the stock of wealth. These are balance sheet items like investments, long-term loans, real estate, and not the day-to-day income and expense flows. Typical transactions include acquisition or sale of shares and debentures, purchase of or sale of immovable property, or giving and taking long-term cross-border loans. Each of these creates or alters an asset or liability either outside for a resident or in India for a non-resident, which is why they are treated as capital account. Let's see some more examples of capital account transactions. Example 1, ODI investments in equity instruments by resident entities like partnership firms, LLPs, companies, etc., or by resident individuals under a liberalized remittance scheme, or the LRS as we know. Example 2, an Indian company receiving foreign direct investment, issuing shares to a non-resident that changes ownership in the Indian company is a capital account transaction. Example 3, granting or availing a long-term external commercial borrowing or foreign currency loan creates cross-border liability. In example 4, we'll see acquisition, purchase of immovable property outside India by a resident or in India by a non-resident within the permitted routes would constitute a capital account transaction. So probably I think we are a little aware that what is now, a capital account transactions, anything that alters the assets and liabilities of the within a country or outside the country. With that, let us go to the next slide and understand what is then capital account transactions. What are then current account transactions? So now we contrast this with current account transactions. Legally, FEMA defines current account transactions as all transactions other than capital account transactions. So that's a very simple definition. So anything that is not a capital account transaction is a current account transaction. The Act further explains that this covers payments related to foreign trade in goods and services, interest on loans, and remittances for living expenses, education, travel, and medical care. So these are essentially revenue type or consumption type flows. They don't change the underlying capital asset structure. While current account transactions cover routine business and personal payments, capital account transactions fundamentally alter your balance sheet by changing overseas assets or liabilities. Here, the golden rule is the opposite. Current account transactions are generally permitted unless specifically prohibited by rules or schedules. There are 3 schedules that reference current account transactions subject to conditions. So Schedule 1 is the prohibited list. Schedule 2 is the list which can be processed, list of transactions which can be processed with government approvals as required. Schedule 3 is a list of transactions which are allowed with certain limits, and in case any transactions are to be processed beyond and above those limits, then RBI approval is required. So let's see what are these prohibited items in Schedule 1. We have remittance out of lottery winnings, remittance of income from racing, riding, etc., remittance of purchase of lottery tickets, banned, proscribed magazines, football pools, sweepstakes, etc., payment of commission on exports made towards equity investment in joint ventures, wholly owned subsidiaries abroad of Indian companies, remittance of dividend by any company to which the requirement of dividend balancing is applicable, payment of commission on exports under rupee state credit route, except commission up to 10% of invoice value of exports of tea and tobacco, payment related to callback services of telephones, remittance of interest income on funds held in non-resident special rupee scheme. So these are the prohibited items. So in Schedule 2, these are the transactions that require approval of the central government. So as we can see, it is about cultural tours, advertisement in foreign media, remittance of freight of vessel chartered by a PSU, payment of import through ocean transport by a government department or a PSU, multimodal transport operators making remittance to their agents abroad, remittance of hiring charges of transponders by TV channels, internet service providers, remittance of container detention charges exceeding the rate prescribed by Director General of Shipping, remittance of prize money, sponsorship of sports activity, and finally, it's remittance for membership of P&I Club. So let's see what is there in Schedule 3. So in Schedule 3, RBI has prescribed certain limits for individuals and for corporates. So for facilities that are available for individuals individuals can avail a foreign exchange facility for the following purposes within the limit of USD 250,000 per financial year. Any additional remittance in excess of the said limit for the following purposes shall require prior approval of the Reserve Bank of India. So what is allowed freely are the following. Now, while it is allowed freely, there is a cap of USD 250,000 as it can be seen on the screen. So private visits to any country, gift or donation, going abroad for employment, immigration, maintenance of close relatives abroad, travel for business or attending a conference or specialized training, or for meeting expenses for medical purposes or checkups abroad, or accompanying as attendant to a patient going abroad, expenses in connection with medical treatment abroad, studies abroad, any other current account transaction.
So, Mr. Farooq, if I'm not wrong, this is 250,000 is per financial year. Am I correct?
That's right. That's right.
Yeah.
So now what you can see on your screen is the facilities for persons other than individuals. So what we saw earlier in the earlier slide was facilities that were available for individuals. So what are the facilities that are available? Donations exceeding 1% of their foreign exchange earnings during the previous 3 financial years of or USD 5 million, whichever is less, for creation of chairs in reputed educational institutes. Contribution to funds promoted by educational institutes and contribution to a technical institution or body or association in the field of activity of the donor company. Commission per transaction to agents abroad for sale of residential flats or commercial plots in India exceeding 25,000 or 5% of the inward remittance, whichever is more. Remittances exceeding 10 million per project for any consultancy fees in respect of infrastructure, USD 1 million per project for other consultancy services procured from outside India. Now let's have some practical understanding. So from a business perspective, current account transactions are the day-to-day flows, trade payments, service fees, salaries, and travel expenses. They are linked to ongoing operations and consumption, not to acquiring or disposing of capital assets. These transactions do not create or alter a person's asset or liability position abroad or in India. They show up in the P&L, not in the capital structure. Regulation here focuses more on limits, purpose codes, and documentation rather than outright bans, except for certain prohibited categories. Some more examples of current account transactions could be: example 1, payment for import of goods or services like software, consulting, or technical services are current account transactions. Example 2, receipts from export of goods or cross-border services. Our everyday export invoices are also current account transactions. Example 3, personal remittances like tuition fees, living expenses for children studying abroad, or medical treatment expenses overseas. Example 4, travel expenses, both business and personal maintenance remittances for close relatives abroad within the prescribed limits are current account transactions.
So Farooq, that means in case of the individual, the limits will apply. But in case of the corporates, wherever the ongoing transaction, etc., is there is no limit is applicable. Because it is related to the business operations. Is my understanding correct?
So wherever they have prescribed limits for corporate or for individuals, those limits would apply. Wherever those limits they are breached or the transaction is beyond those limits, then RBI approval is required.
Correct. You said that actually that schedule 1 and 2 and 3, subject to that I am talking. Yeah.
Yes.
Yeah.
Because limits are separate for persons.
So
That's
what I understood is, Balasa's question is, In case of business transaction, there is no limit. You can spend
Correct.
even 1 million also, there is no limit, except the two
Correct.
transactions where the limit is prescribed.
Correct. Correct.
Rest of the
That-
transaction is unlimited. Without any limit, you can remit any amount outside India.
Yeah.
There is a current limit
Correct,
applies
correct.
mainly to the individuals. When individual is remitting for the personal use, then the limit at 2,50,000 USD applies.
Correct. That's what my understanding is.
Yeah, that
Right.
is clear.
Now, this slide captures the regulatory philosophy side by side for capital account and current account transactions. For capital account transactions, as we saw earlier as well, the approach is generally prohibited unless specifically permitted. A transaction is allowed only if it falls under an explicit regulation or RBI approval. For current account transactions, it's the reverse. Generally permitted unless specifically prohibited. Foreign exchange can be drawn freely except for listed, prohibited, or restricted items. This is a summary table to show the differences and is useful as a quick reference. In terms of nature, current account is about day-to-day income and expenditure flows. Capital account covers transactions affecting the stock of assets and liabilities. The impact: current account does not alter net assets or liabilities abroad or in India. Capital account by definition does. So the regulatory stance: current account is generally permitted with some restrictions. Capital account generally prohibited unless clearly allowed. With that, I would request Sejal to walk us through the challenges and what we need to keep in mind as professionals.
Thank you, Farooq. So moving on to the next slide. Having learned the concept and differences, we now turn to challenges. In practice, the challenge is classifying borderline cases and composite transactions. What we mean by that is, if there is a transaction which has multiple kind of twists and turns, then we will have to dissect and analyze that in a proper phases. A quick test is, does the transaction create or alter asset or liability across borders, as we discussed in the previous slides? If yes, it's likely to be a capital account transaction. Routine payment linked to existing asset or services like interest on loan, dividend payment, service fees is usually current account transaction. And what we would recommend is that whenever a person is in doubt, the safest check to do is check the FEMA regulations, the schedules, and the RBI and government notifications. And if still none clear, consult an expert or an AD bank who will be, supporting in the execution of the transaction. Why does this matter so much for us as professionals? This is very, very important. Misclassifying a transaction, treating a capital account transaction as a current account or vice versa can lead to non-compliance penalties, delays in remittances. Non-compliance with requirements of FEMA relating to capital account or current account transaction can result in significant legal, financial, regulatory, and reputational consequences to the individual, to the company, to the bank, to the authorized dealer. So the key takeaway is that FEMA is a civil law. Non-compliance can lead to substantial financial penalties. The monetary penalties prescribed under FEMA could range up to 3 times the amount involved in contravention, where the amount is quantifiable. And where the amount is not quantifiable, there it could be compounding proceedings could follow. There could be education proceedings. There could be, as a last recourse, some enforcement directorate actions also, in case there is a serious repeated violations that may attract enforcement directorate interventions. So as such, it is very, very key. We as finance, treasury, legal, compliance teams need to factor this classification in the structuring stage itself, in the early stage itself. Not just wait till the time when the remittance is to be effected or reporting is to be made. That it could be very late, as it may change the complete dynamics. Not only the timelines, but costing, structuring of the deals would be definitely important considerations to factor. A basic knowledge, a working knowledge, helps us respond to the client's internal queries, coordinate smoothly and efficiently, and manage the regulatory risk. So, as such, this topic is absolutely crucial and important for us to take into account at a very, very early stage whenever there is these cross-border transactions and elements involved. next slide is the case study. We've just tried to make this more interactive. We put a case study here which shows how one business arrangement can have multiple effects, of how one business arrangement could have a current account and a capital account kind of impact. This scenario is that an Indian company pays a foreign vendor for customized software and also takes long-term foreign currency loan from the same vendor. Now, how would you classify this, whether it is current account or capital account? So here we have to dissect. The software payment is a current account transaction. It is trade payment for an imported service, whereas the associated long-term loan is a capital account transaction. It creates foreign currency liability and must comply with the ECB and FEMA regulations. So one commercial deal could have two separate FEMA treatments, which is why classification at the early stage is very key and critical element to be taken into consideration.
Sejal, 1 minute. Go to
Yeah.
that slide. You are telling software. Software or software services. When you say software you purchase, according to me, customized software, don't you think it will be asset?
Yeah. So
what is your view?
No, software, we don't capitalize it as an asset, Deepti.
Okay.
So only at the most you will take it as the deferred revenue kind of thing.
Okay.
You will amortize it over a period of time, which is permitted under the tax rules.
Yeah,
But software is not an asset as such. It's not a capital asset.
It's not capital. Okay.
I agree with Sudhakar ji. It is the treatment that would be given in the books of account. Depending on that, it would be categorized as capital or current account. So in most of the cases, the treatment given is that it has been taken off in the P&L and therefore not the balance sheet. There will not be any balance sheet effect, and therefore it is treated as a current account transactions in most of the organizations.
Okay, thank you.
Moving on, some practical tips for us as professionals. On the practical side, there should be 3 habits that will really help this whole navigating this capital account and current account transaction. First, classify upfront. As I said, initial structuring phase, just look at it, ensure that proper evaluation analysis is done. Always identify whether the underlying purpose is an asset creation or liability or routine payment. So to Diptiben's point, the earlier example, software. So there was no creation of asset, and hence it was a routine payment, and that is why it was classified as a current account. Second, check regulation. Look at the applicable limits, documentation, whether it is a route, or whether it is under automatic route, or whether it requires government or RBI approval. And third, very, very key, maintain records, purpose code, underlying invoices, contracts, board resolutions, approvals. These documentations are very critical to be able to evidence the analysis you have made at the start of the structuring, because those will be required to be maintained for audit and regulatory inspection trail purposes. So these are very, very key tips one has to remember while executing these kind of transactions.
Yeah, this is actually very important because it shows how the professional, way of drafting and creating and putting the things will be actually required. Because when we go to RBI for anything or anything comes out, we should have beyond doubt to exhibit with a reference to the documentation evidence, which itself should be self-speaking. That care should be taken actually always. That is the thing. Yep.
Yeah, the main thing here, our experience, whenever this records is not just maintained for 1 year or 2 years, that is very crucial. For all foreign transaction, it should be for years, because as and when, suppose there is a private equity or there is a IPO or any big transaction or expansion, then indeed this is a very crucial thing, because whether you have brought the capital or in a proper way, otherwise it's create a lot of time, then you have to search it. So this record should be permanently kept under FEMA, because that maybe after 10 years, 15 years you will require. Yeah.
Right.
Absolutely.
Yeah, one clarification, acquisition of the software from outside India. See, when we acquire a software, when we obtain a software from the foreign company, okay, it does not alter our assets or liability outside India, then it is a current account transaction. Even if we are booking as an asset in balance sheet, then also it is a current account transaction. Because we are not creating an asset or liability. Okay.
Okay, thank you.
Thank you. Moving on, so basically, to wrap up, FEMA's capital account and current account distinction is fundamental to managing cross-border flows correctly. Capital account transaction involve changes in assets and liabilities, and therefore it has tightened regulatory framework to follow. Whereas current account transactions relate to routine flows and relatively more liberally. Uh, for professionals, the key is to classify correctly, understand applicable limits, understand the regulations, understand the approval requirements, and do not hesitate to consult a subject matter expert or the AD bank whenever in doubt. If you remember nothing else, remember that classify correctly, document diligently, and consult when in doubt. This is very, very key because FEMA, the implications are very, very strenuous, and it could be not only penalties, but as I mentioned, education proceedings, as also ED, Enforcement Directorate intervention. So this is very, very critical. And lastly, as Naren sir mentioned, we have tried to put down a definition of the resident and
One thing
non-resident.
also,
Yeah,
Sejal,
sure.
all the participants, even though you connect to AD, but check rules regulation as well. You can't just blindly go with AD because you have to also support your transaction, understand your transaction, and see that what AD is telling is matching with rule regulation, and you convince yourself. Thanks.
Absolutely. Because see, AD is not the final authority. They are also interpreting. So it is important that you need to review the regulations and interpret according to what you feel appropriate and consult the AD and perhaps, see, I would say consult the subject matter expert because these transactions are very high value and the implications are very high and huge.
So very valuable point, I think, what you mentioned, Dipti ma'am. Even within ADs, there are different views. So, and therefore, we should be very sure of what we are referring to the AD. And once we know what the transaction is, we will definitely be able to convince the AD, and therefore the transaction can be processed.
Absolutely.
See, AD is as good as the RBI because they are just representing the RBI only. So that is the issue. So the thing is that instead of we directly dealing with the RBI, we are dealing with the, as Dipti puts it very clearly, yes, when we go to them, they will actually tend to say something which we have to cross verify. If we cross verify, if we bring out to their notice, then they will get corrected. That is what we need to do. That is one thing. Second thing is, I also appreciate, yes, it is true. I have actually come across with, the ADs in the different places, even neighboring states. Maharashtra versus Gujarat, the view is totally different. That is also there again. Yeah.
And AD, there could be operational level differences between two AD banks also. We've seen that in our practical
Absolutely.
experience.
Yeah,
So
yeah, but
absolutely.
one thing, so far as the capital and current account transactions are concerned, there is no much confusion. It is very clear. We can easily identify whether it is a capital account or current account. It is very simple. There is no question. There are confusions in other aspects. And when the AD views differs from AD to AD, I observed it in number of cases. But so far as the capital and current transactions are concerned, it is very clear. There is no doubt. Very clear. Can I, before
Absolutely.
we proceed to the residential status, can I summarize the current
Yeah,
account and
sure,
capital
Of
account?
course,
sure.
sir.
See,
Sure.
Please.
in order to apply FEMA provisions, applicable notifications, rules, regulation, first thing we have to determine whether person is a resident or non-resident, which we are going to cover in this slide, okay? But in case of, once we have established whether transaction is a capital account or current account transaction, accordingly we can apply the applicable notifications, rules, and we have to follow the rules, guide, and different criteria of the particular notification, rules, etc. Okay. So first thing is to determine capital account or current account transaction. Okay. It is very simple. If a resident of India undertakes any transaction outside India, and his assets or liability outside India is either increased or decreased, then such transaction is a capital transaction for the resident of India. For example, I am acquiring a property outside India, my asset will go up. So I am borrowing money by way of ECB, then my liability will go up. Suppose I am investing in the shares of the foreign securities, then my asset will go up. Similarly, if I am receiving FDI, then my liability will go up. So these are very clear, there is no doubt. Simply as an accountant, we can say that items, the effect of which goes to the balance sheet, no? That is considered to be a capital account transaction. And items, the effect of which goes to the profit and loss account, that is considered as a current account transaction. Suppose if I make the payment of technical fees, royalties, dividend, or anything, current account transaction which is debited to profit and loss, and it is very simple. It is a current account transaction. So there is no much confusion at all. Okay. Now the question is, if it is a, if you first you determine whether it is current account or capital, once you determine it is a current account transaction, you have to apply. There are three schedules. Schedule 1, prohibited transaction. This is the where are rare transactions which are not applicable in day-to-day life. Okay. Schedule 2, where the permission of ministry is required, respective ministry is required. That is mostly for the PSU, not for the private companies. Okay. In case of government organization, for certain activities, they have to take the permission of the concerned ministry. That is schedule 2. And third schedule is, in third schedule, there are two parts. First part is for the individuals. Individual wants to remit any amount up to till like 50,000. There are certain purposes, gives loan, this, that, for personal tools, maintenance for relatives, medical treatment. Yeah, this is permitted within limit of 2,50,000. Okay. In case of a corporate, there is no limit for any transaction. They can remit royalties, technical fees, millions of dollars. There is no restriction at all, except two restrictions which are given in Schedule 3. That is the consultancy charges and per project, and 1 million and 10 million. These two limits are there. Apart from that, for all other transaction, current account transaction, we can remit number of millions of dollars. There is no restriction. Okay. So what we say is all current account transactions are fully permitted unless such transaction is prohibited under Schedule 1, or such transaction requires the permission of the ministry, Schedule 2, and Schedule 3. If transaction is not covered under any of the three schedules, such transactions are fully permissible. There is no permission of prior permission of RBI required. Is it clear?
Perfect. Yes, sir.
Similarly, for
Summary.
capital account transactions, we can take other way. If any transaction which alters your asset liability outside India, or non-resident does any transaction in India and his liability in India is increased or decreased, then such transaction is treated as a capital account transaction, and all capital account transactions are prohibited unless specifically permitted by any notification, government rules, or any master directions. Okay, if it is not permitted, then such transactions are prohibited. Very simple. So for each and every capital account transaction, you have to see which notification, which circular, which rule is applicable, and you have to go to that rule notification, see what are the criteria over there. You have to comply with the criteria, and if you cross the limit or if you go beyond the criteria, then RBI permission is required. So it is very simple. All capital account transactions are prohibited unless there is a special permission by the RBI or Government of India by issuance of notification or government rules. And there are certain questions, practical questions coming into day-to-day life. For example, so many residents nowadays are planning to acquire property in Dubai. Many people, at least one or two people comes to me every week. Okay, we want to acquire property in Dubai. Okay, you can acquire. Suppose the value of property is $500,000, but under LRS you are allowed to remit up to $250,000. That is 50% of the $500,000. So they ask the question whether we can borrow from the foreign bank. There are so many banks in Dubai available willing to give us the loan. Whether we can borrow, there is no answer, clear-cut answer to this question in FEMA. It simply says whether borrowing money outside India is a current account or capital account. It is a capital account transaction. You are creating liability outside India. Okay. But is there any notification for borrowing such amount under capital account transaction? There is no any notification allowing individual to borrow outside India, and that is why it is prohibited. There is no direct answer. There are certain questions, but indirectly it says no, it is not allowed. You cannot borrow. So if the
Naren,
value
there
of
was
property is more
recently,
than,
Mr. Naren, there was recently a clarification, that some people who are purchasing the property in Dubai, they were making the payment through credit card. RBI said that is not permitted.
no, not allowed, not allowed. You have to make remittance from India only. Sometimes it happens, the value of the property says 1 million. And somebody who is very damn, I want to acquire this property this way or that way. Then we can give one solution. If there are 4 family members, each family members can remit 2,50,000 each, and property can be acquired. RBI has given the permission that property can be acquired in the name of only one individual. That is allowed. If it is in joint name, it is okay. But even if it is acquired in the single name of all the family members, then it is acquired. You can acquire the property, but you cannot borrow even builder or there is ready to give you say installment. Can you give me after say 6 months, after 1 year, 2 year? That is also not allowed. That is also indirectly creation of liability.
Correct, correct.
Naren, there are
So
certain questions have actually come here. So a gentleman is asking here, the property purchased from the NRI, whether the payment could be done to his relative in India on behalf of him.
property in India, na, you mean to say? Property in India is being acquired by NRI, correct?
No, yeah.
NRI
Yeah,
property
property
acquiring
purchased
property in India, correct? What is the question?
from NRI.
No. What is the question actually?
Yeah,
Can you just read?
property purchased from NRI. That means is from NRI. Whether the payment could be done his relative in India on behalf of him.
For properties in India or outside India?
That is, he has not mentioned here. That makes a difference.
Yeah.
That makes
First
the
thing you have to look
difference.
at where the asset is situated. Accordingly, you can take the decision, no?
Correct. I think
Resident
we'll have to
cannot
ask.
make the resident can acquire property outside India only under LRS. Okay. If it is a property in India and being acquired in the name of non-resident, then payment should also come from the account of the non-resident, from NRE, NRO, or direct remittance. Resident cannot make the payment. If resident makes the payment, then such asset appears in the balance sheet of the resident, not in the name of NRI.
A non-resident individual.
Property in India. He has
Hmm?
mentioned property in India.
I
Property
didn't.
in
What did you
India.
say? Yeah, property in India.
Ah.
Yeah, then the payment has to come from the NRI only. From NRO, NRE, or direct remittance, 3 options are there. But if resident makes the payment, then according to Income Tax Act, the person who makes the payment is considered to be owner of the property and such asset appears in his personal balance sheet. Then wait the question. NRE is only for the namesake. That is not allowed.
Then there is another question is there. A non-resident individual of the Indian origin, now US citizen, has inherited residential flat in India, having 50%, along with his sister, who is actually related, having his 50% share. Instead of the flat under the name, whether this non-resident need to inform any file or any form, anything to
With
RBI
RBI.
upon
No.
getting the 50% interest in the Indian flat. What is the
It is an inheritance. It is a case of inheritance. Non-resident whose parent or somebody relative is in India and they pass away and that time non-resident gets the property. Such inheritance is permitted without
what
any
is
limit.
the reporting obligation?
No reporting is required. Only reporting is required at the time of when he sells the property and wants to make the remittance outside India up to 1 billion, then reporting is required. No reporting is required at the time of registering the inherited property in the name of non-resident.
What are the formalities for an Indian private company to acquire equity shares in an Indonesian entity?
You have to file Form FC and comply with all the required valuation, etc.
Does the
But
release
that is
of the
ODI
interest
transaction.
does the
Yeah.
release of the interest in the property in India by the non-resident in favor of the resident relative being a brother or sister require approval?
A remittance for what?
No,
No.
release of interest in the
Release
property.
of his interest. That means brother and sister.
Interest is a current account transaction. Interest is a current account transaction. No permission is required.
No.
Overseas,
He is
and I will
talking.
say
He
it
is
is a
talking. Yeah. Okay, Dipti, go ahead.
a non-resident is holding interest in the property, he is releasing that interest in favor of his Indian relatives, whether it require any approval or compliance.
It is considered as a gift.
Yeah.
It is considered as a gift. And gift received by Indian resident from the non-resident relative is exempt under income tax. No formality is required.
Under FEMA,
Oh.
the under FEMA.
No formality is required.
There is no FEMA transaction over here, so because
Yeah,
there is
yeah.
no transaction that is happening, there is no payment which is happening.
Probably, Dipti, I think the question comes because whenever we go to some consultant, what happens is, as he rightly put it, is a gift. If you want to actually give away to your relative, it is automatically a gift, a blood-related gift. It automatically permitted, it goes actually, there is no problem. But what happened many times, the professional advice, no, you make a release deed. That is what they do. The problem comes from there only. When you come to the release date, it occurs the regular contract and transfer, etc. That is where it comes. So as he puts it very clearly, if there is a, instead of the relative, if he's giving up his right, then it should be simply a gift deed. We should not talk about the release date. That's what I think.
Yeah. What is dividend balancing?
What is the dividend balancing?
Dividend balancing was the earlier comes, now it is gone. It is there in the prohibited list in current account transaction, but now there is no limit. You have to comply with the company law provisions. The limit is gone earlier, long back. That remains to be deleted, I think. RBI is not deleted so far. You can pay any amount of dividend subject to payment of Indian taxes.
If I wish to send amount to a friend in USA, limit of USD 2,50,000 is applicable.
Yeah, you can give loan, no? It is a for loan.
Individual.
Yeah, it is allowed.
Yeah, subject to that limit, because individual subject to limit, you can do that. What about the real estate trading of the
No, your voice is cracking.
Your voice is cracking, Mr. Bala. I'll read it.
prohibited
Mr. Bala, your voice is cracking. I'll say. What about real estate trading as prohibited transactions?
Was that covered unless
I think, Mr. Bala, I'll read out your question. Your voice is cracking. Okay. What about real estate trading as a prohibited transactions?
See,
Was that covered unless I have missed out hearing something?
See, non-resident cannot do any real estate trading in India. Buying and real estate trading is defined in FEMA as buying and selling of any commercial, residential or any other property in India with the intention to earn profit without making any addition. That is a real estate definition. Such transaction is not permitted at all, strictly prohibited. If a non-resident buys a property, say land in India and construct commercial or residential house, and that is allowed. But without any addition, just buying and selling with the intention to earn any profit on that is not permitted. That is strictly prohibited.
2,50,000 is for the individual and
Yeah, it is for the individual.
corporate, please confirm. Yeah, that
No.
we said actually, it is only for the individual. Corporate, there is nothing. Okay.
Mr. Bala,
Yes,
Sudhakar wants to say something. Yes, Sudhakar.
Yeah, yes, Sudhakar.
If you see the questions, the way they have come, there are 3 to 4 segments are there. One is buying a property in India, buying a property abroad. Then modalities of payment. That is one. Second thing is remittance of dividend. Third thing is procurement of loan from individuals. So what I suggest is, Mr. Naren and Mr. Farooq and Sejal, if you clarify these 3-4 questions, otherwise there are 80 to 100 questions are there already. Everyone is having some small or the other question. So you comprehensively address these 4-5 issues, everything will be addressed. Yeah.
What is the first question? Can you just repeat it?
See, the first thing is buying a property in India by NRI or by a non-resident.
Okay.
Let me. And the modalities of payment.
Okay.
See, the same point of time, buying a property overseas, abroad property, say in Dubai or anywhere else, by a resident India or by a non-resident India. Just this is one question. First of all, answer this one comprehensively.
NRI or OCI card holder can acquire any commercial or residential property in India. There is no restriction at all, but the payment should come from outside India. either from NRO account or NRE account. Three options are there. They can acquire any commercial or residential property in India without any restriction, but they should be either NRI or OCI. Difference between the two is those who are say in Gulf, they are staying there for a number of years, but their status is NRI because they are holding Indian passport. Such people are considered to be NRI, they are permitted. Suppose somebody is going to USA, Australia, Canada, UK, and they have taken the passport of the host country, then such residence is considered to be OCI. They have to obtain OCI card in India. If NRI OCI is willing to buy any property in India, they can buy commercial or residential property without any limit. But if they want to acquire any agricultural land in India, then it is not permitted. They cannot acquire
Yeah.
any agricultural
Just
land.
one addition, Mr. Naren, to that is, can an NRI, instead of NRO or NRE account, can he acquire a loan from an Indian bank in India and purchase the property in India?
I think it is permitted, but ultimate
Permitted,
payment to
yes.
banks should go from the NRE or NRO account.
Correct. Correct. Absolutely. So now the second question is about, as I was
Similarly,
mentioning,
acquisition of property outside India by resident is permitted under LRS limit. As I told you, if the value of the property more than 3 or 4 individual family members can join together and make the remittance up to 2,50,000 per person, or sometimes it happens that you are acquiring properties in the February, March. Balance payment you can make in the April. So payment is split in 2 years. So you can make the full amount remittance per single person. That is also permitted. But you cannot keep anything outstanding. You cannot create any liability outside India. Similarly, many of the people nowadays it is a practice. I incorporate a company in Dubai. Okay, for doing some business. Instead of acquiring property in my individual name, I acquire property in my Dubai company. That is also allowed. But restriction is that property should be for the use of the business of the Dubai entity. You cannot let out such property. You cannot keep it idle. It may be for the residence of the staff, for the office, or for resident director, Indian directors, etc. Many people are acquiring property like that. And
Mr. Naren,
similarly,
suppose, suppose if I put a question like this, basing on the questions received, suppose if I say that an Indian resident is acquiring a property, say in Dubai, for $1 million, and this property is under construction, it will be given the occupation after 4 years, and the payment is to be made over a period of 4 years. Is it permitted?
yes,
If I am making the payment $250,000 in 4 years and acquire the property at the end of 4th year, I am signing the sale agreement or whatever it is. I am getting the possession of that. Is it permitted?
Yes.
see, if you have entered into agreement with the builder and payment is split over a period of 4 years, then it is allowed. Only thing is it should be within 2,50,000 per year.
Yeah.
That is allowed because you are not creating liability unless the installment of the second, third, fourth installment is due. Till then, you are not created in liability. Liability can be said to be created only when it is due and you have not made the payment. Then it is a liability.
Right.
So the
Now, I
limit
think some more
applicable
questions
is,
Yeah,
sorry,
sorry.
I
Go
just
ahead,
wanted
Mr.
to
Farooq.
add, yeah, so I just wanted to add the limit applicable, as Naren sir just mentioned, the limit applicable is $250,000 per financial year. Now, it would also, in some cases, it also happens that somebody will remit 250,000 in March, and in April, on April 1st, he would try to remit another 250,000, and that is permissible.
Yeah,
Yeah, that
okay.
is absolutely permissible.
Legal.
It is falling into different financial years.
Exactly. So it's just like within a span of few days or weeks, he will be able to send 2 transactions for $250,000.
Yeah,
You have to
that is
take the
right.
possession after making the second remittance of the second installment. If you
Right.
take the possession before making the second remittance, then it means you have created liability. It is not allowed.
Correct. Absolutely. Okay, then the second set of questions, what I could say is that about the payment of dividend by Indian companies, right? And is there any limit in that, or any earlier good old days we used to have the shares issued on account of repatriation, non-repatriation. If I am not wrong, these days that restriction is not there. Any amount of dividend can be remitted. Kindly throw some light on that.
See, shares in Indian company are on repatriation or non-repatriation basis, but when dividend is declared by the Indian company, such transaction is considered to be a current account transaction and can be repatriated without any limit. Dividend balancing law was there earlier long back that has been removed, but I think RBI is not yet removed from the first slide of current account transactions, Schedule 1. There is no restriction on dividend. You can remit any amount subject to payment of Indian taxes. Suppose the rate of tax for payment to non-resident is 20%, then Indian company will have to deduct 20% tax and pay. Or if the treaty is there between the host country and India and rate in treaty is lower than 20%, then you have to give evidence to the respective company. So company will deduct dividend taxes for that rate.
Okay, great. I think, Bala, to a large extent, the questions are answered. Now I think let the Sejal complete her presentation, then you can take up the remaining questions which are
Yeah,
unanswered.
sure.
Okay.
Let us complete this resident. Okay.
Yeah. So I think we've almost concluded the presentation. This last slide was just, as Naren sir said, just trying to put the definition of resident, non-resident. The distinction between resident and non-resident under FEMA is very, very fundamental because FEMA regulates cross-border transactions, as Naren sir said, and transaction is treated as current account or capital account. Whether it is permitted, restricted, requires approval, is all dependent on the residential status of the parties. So we've just tried to reproduce the definition of resident and non-resident here. Yeah, with that we conclude the presentation.
Oh,
And
great.
yeah,
Okay. FC limit up to 4% of the net worth for the corporates.
What did you say?
FC
Sejal, you
limit.
must stop sharing your presentation.
Yeah. It is 400% of the net worth of the Indian company.
Yeah, that is what he's saying. FC limit is 4% of the net worth of the corporate. That's what he's asking.
Yeah.
Then he says for individual limit is USD 250,000 per year for
Correct.
all the transaction covers under the rule for each line item separately. I think it is for all the different nature of the transaction. Aggregate limit is 250,000.
Yeah, aggregate per year. Suppose I have individual. I can form 4 companies outside India. 1 year, first year, one company, second year, second company. Total amount can go more than that. But overall per year, you cannot remit more than $250,000.
Somebody has simply put a ODI limit. I don't know what exactly he is asking.
Yeah, it is OD means overseas investment limit. For individual, it is LRS limit, and for other than individual, it is 400% of the net worth based on the last audited balance sheet.
Which department is the central government for current account transaction? Everything is looked after by RBI. There is no question of which department or something like that. It has to go by RBI.
Yeah.
Okay. What are the formalities should be followed in case of the foreign branch of the Indian entity? Does it will be capital transaction or current transaction?
It is a capital account transaction. We are opening a branch outside India. We can also call it a rep office, representative office. It is allowed.
Whether LRS comes under the capital account or current account? Whether
LRS. LRS.
Yeah.
LRS, see, remittance under LRS is permitted for any current or capital account transaction outside India. It depends upon what you want to do. Suppose you want to fall to the traveling, it is a current account. If you want to buy a property over there, it is a capital account transaction. If you want to invest in a foreign company shares, then it is a capital account transaction.
There is a payment by the individual for the import of the personal goods to a non-resident entity requires approval for or reporting.
See, when you send the goods outside India for personal purposes without any commercial value, then you have to give a declaration KG without any commercial value. And under such case, you are not supposed to bring the money back to India for that export. That is permitted. Suppose my relative is there in UK, I'm sending some spices or some pickles, anything from India. Value is say 5,000, 10,000, 15,000. I have to give a declaration. It is no commercial value. Okay. Then RBI will not ask me to make the remittance for that export transaction. That is allowed.
What about the royalty payments to the foreign parent company every year based on the sale of the products within India?
No limit. That
or
limit
a fixed
was
or the fixed amount for the use of the brand name or logo is it a current or capital account?
It is a current account transaction, and earlier there is a limit of 8% on royalty payment. Now that limit has been removed. You can pay even 50%, no problem. There's no restriction. Commercially, it should be justifiable because if you charge, you give more royalty, say 50%, 20%, 30%, then income tax people may question and may disallow. That is a risk you have to take. Otherwise, under FEMA, it is allowed.
Is the ECB interest treated as a capital or current account transaction?
Current.
Also, what about the ECB repayment already as per the approved agreement?
ECB interest is a current account. ECB repayment is a capital account transaction. Because liability is reduced, no?
When a FGGRP application was actually filed with the company in RBI portal, it was approved with the late submission fees by RBI Regional Office, Chennai. The reason for delayed filing, delay was AD Bank is actually providing KYC and FIRC excess limit of FDI and the delay is doing refund. It is not mentioned in the form by RBI, and along with it, let it necessary to undertake a compounding. Is it still necessary to compound the delay still?
See, nowadays, if there is a delay in filing from FCTRS or FCGPR, RBI, instead of going asking you to go for the compounding, they simply give you a shortcut. Can you pay LSF 7,500 plus 0.25% of the amount involved in transaction? If you make the payment of LSF, late submission fee, then your transaction gets regularized. Okay, but if delay is more than 3 years, then RBI may drag you to the compounding and you have to go for the compounding. And many a time it happens that delay is because of delay on the part of banker for issuing FIRC and KYC. These are the two documents. Then also RBI doesn't listen to you. You have to pay LSF or go for the compounding.
Okay, if it is like a operation software, whether it will be capitalized. I think software we have already answered. By and large, it is not capitalized as a current account. That's what you said actually.
No, it is a software, purchase of software is a current account transaction because you are not creating any liability outside India. No?
Yeah. Import of the machinery, is it a capital or current account transaction?
It is a current account transaction because you are not creating any liability. No?
Payment to a software document not after the asset of the resident outside India, hence the current account transaction in my view. Somebody is actually putting it here. Okay.
I didn't understand.
Please explain rupee payment method of setting a foreign liability.
Rupee payment?
Rupee payment method of setting a foreign liability.
Rupee payment is allowed to certain countries like Russia. We have got an agreement with the Russia. Some Nepal, Bhutan, we have got the agreement. So if you have made any import and we have to make the payment, we can make in rupee. But the rest of the countries don't allow rupee payment.
Mr. Bala, we are into basics of FEMA. We are going too ahead of.
Okay, I'm willing to answer. No problem. Go ahead.
No, Mr. Naren Kumar, I'm not telling you are so kind that you are answering and your knowledge is so vast, but this way we will not able to complete even 3 o'clock.
Okay, fine.
People will ask questions like anything.
Okay, then I'll do one thing. I'll take only the capital and current account related questions I'll take.
Yeah, please. Otherwise, it will be
Correct.
Okay.
and they have to finish your presentation.
What
But
she has already done the presentation. She has finished.
we did not cover the last slide of the resident, non-resident. That needs to be covered. Last slide.
Okay, then
We did not discuss.
let
It
her
is very important, very important.
Yes,
then
yes.
let her cover that. Then we'll move forward. I thought she has finished the presentation. That's what she said. Actually, we are in the concluding part.
I skipped on her. Yeah.
Yeah. Yes, you can go back to the presentation and finish up your last slide presentation, please.
Where the residential That is very, very critical, as Naren sir said. And it is under
Sure.
FEMA that the person's rights and obligations are determined by whether they are resident or person resident outside India, not by nationality. So, for example, an Indian citizen living abroad may be a non-resident under FEMA. A foreign citizen living in India for the required period may be a resident under FEMA. This distinction determines the FEMA rules, and accordingly it will apply. It determines whether a transaction is a domestic transaction or foreign exchange. FEMA regulates the transactions between resident and non-resident. And that is why, as Naren sir said, this definition is very, very critical. The dependency on whether it is current account or capital account is based on the residential status.
Are you not putting the presentation slide actually?
Just open the last slide.
Yeah,
Last slide.
last-
Resident and
Yes, yes.
non-resident. We'll discuss
Yeah.
it because that is
Yes,
very
yes.
important.
Yes. Share. Yes. Can you see now?
Yeah,
Yeah.
we can.
Yes. This is what we
See,
just
see, definition of resident is given under 2V of FEMA, okay, and non-resident is defined the negatively. Those who are not resident of India are considered to be a resident outside India. That is non-resident. Okay, we need to understand who are person considered to be resident of India. Okay, this is slide says person residing in India for more than 182 days during the course of preceding financial year. So if you want to determine the residential status for financial year 26-27, you have to go back to 25-26 and see whether a person was present in India for 182 days or more. That is the first condition. In order to decide the residential status for the current year, you have to go back to previous year and see whether stay during the previous year was 182 days or more. That is one condition. Then such person is considered to be a resident of India. Number two, if such a person comes to India for taking up employment, for doing any business or vocation, or for any other purpose where his intention indicates he wants to stay in India for an uncertain period. So under this situation, person is considered to be a resident of India. Somebody comes from outside India. Sorry, first one is person goes outside India. Such person has stayed in India for 182 days during the previous year, and he goes outside India for taking up employment, for doing any business or vocation, or for any other purpose where intention is to stay outside India for an uncertain period. Under all these situations, from the day one person leaves India for any of these three purposes, he becomes non-resident. Even if he stayed in India during the previous year for 182 days, when one leaves India for any of the three purposes, day one he leaves India is considered to be non-resident. And once he is considered to be non-resident, no provision of FEMA applies because FEMA is applicable to resident. Okay. Similarly, a, a person who's outside India comes to India for three purposes: employment, business, or for any other purpose. Intention indicates to stay in India for uncertain period. Under such situation, is considered to be resident of India from the day one he comes to India. But recently, it has been, I think, one judgment has come which says this can also be misused, and that is why it is stated in the judgment that just person comes to India for taking up employment does not become resident from the day one. His stay during the previous year should also be more than 180 days because this was being misused for many cases. For example, if somebody non-resident who is a person of non-Indian origin, non-NRO, absolute foreigner, he comes to India for taking up employment in India and he becomes resident from the day one. Then resident is allowed to buy any commercial or residential property in India. So this can be misused. Somebody takes up employment for the namesake for few days and buys the property. Then is allowed to buy the property. That is why the one decision has come recently, which says no, he should also stay in India for 182 days of, more during the previous year, and then he takes up the employment. Then he becomes resident of India. Same thing applies to the business and other purposes also. So just person comes to India, day one he does not become resident of India. That is why condition is extended. And for acquisition property, in 2009, when the press release was issued, see, many foreigners were tempted to buy property in Goa. There are so many foreigners who are buying property in Goa. And earlier, prior to 2009, many foreigners have purchased property in Goa and nobody asked them the question. They used to come for employment for any other purpose. And registrar of property used to register property in the name of foreigners. But afterward, when the government came to know that government issued a circular, that is press release, that person who comes to India for any of the three purposes and stay in India during the previous is more than 182 days, then only he is a resident, and only resident after becoming a resident, he can acquire the property in India. So this is the critical situation. Rest of things are okay. Now my simple question is, when resident enters into a transaction with another resident, FEMA is not applicable. When a non-resident enters into transaction with a non-resident, FEMA is not applicable. Normally, what we understand is FEMA is applicable when resident undertakes any transaction with the non-resident or vice versa. Okay, but in certain situations, even transaction is between two residents, then FEMA is applicable. For example, I got a property in Dubai. My son is also resident. I am also resident. I am gifting it to my son or selling it to my son. Then even if transaction is between two residents, me and my son both are resident, but property is outside India, then FEMA is applicable. If the subject matter is located outside India, situated outside India, then FEMA is applicable. Similarly, a non-resident has got shares of the Indian company, and his son is also non-resident. He gifting or selling to his son. Both of them are non-resident. Normal course, it is not applicable. FEMA is not applicable. But since the shares of Indian companies are in India, situated in India, the FEMA is applicable. That is why the status is very important.
Yeah, that you said very clearly actually. One is actually the residential status is very important. Second thing is the subject matter in which the transaction is taking place. That is also very important. Yeah.
This all is your slides, Sejal?
Yes, we are done.
All is done?
Yeah,
Okay.
Yes.
we are done.
Then, Mr.
Yeah.
Bala, you take all
Yeah.
the question. We don't mind. Only thing we have to keep in mind, because we have sufficient time. I think if we cover fast, we can cover. We can cover the
Yeah.
questions. Whosoever.
Okay. Let us see.
Take all. It's okay.
Yeah. I left around 11:59, I think so. Let's see that. A person resident has got a stocks of the US company issued in the ESOP while in the employment. Now the individual want to actually sell their shares and invest the shares under the US companies and actually trade in US stock exchange. Is this permission under the REMA, or there is a permission is to be taken?
See, ESOP, when he sells the ESOP, you will have to bring the consideration to India. And then from India, you will have to remit back to his LRS account and make the investment from LRS account. Because ESOP is considered as a ODI, okay? And ODI, whenever you sell any shares which is acquired out of the ODI process, then you have to bring the consideration to India and then you can remit back.
My client resident in India has invested in listed shares in UK and US. Is he required to do any compliance under FEMA?
Resident acquiring shares of foreign listed company is not required to make any compliance, but except one thing, when he files the return of income, there is one schedule called FLA, Foreign Liabilities and Asset Schedule. Okay, in that FS schedule, in FS schedule, he will have to disclose he is holding the shares of foreign company. Otherwise, there is a penalty of ₹10 lakh under Black Money Act. Disclosure is mandatory, and many of CES and many of the investors are not aware of this.
Can a purchase of the immovable property situated in India and owned by the non-resident be paid outside India by another non-resident Indian acquiring the same?
Property is in India held by non-resident and another non-resident is acquiring. That is the situation.
Yeah.
Property is in India held by one non-resident and is selling to another non-resident.
Yeah, that is what it says. Like, can a purchase of property situated in India owned by an NRI resident to be paid for outside India by another non-resident Indian acquiring the same?
See, if both the non-resident are undertaking the transaction outside India and payment is also made outside India, then FEMA forward is not required. Just they have to register the property in the name of the new buyer. Okay. But if a remittance is made to be made from India, that is also allowed, no problem. But this is subject to payment of Indian taxes, capital gain tax.
Your books of accounts have no relevance in the decide capital or current import machinery or current, but you capitalize in the books. Balance of the payment is trigger for clarification. I don't know what is this actually.
Yeah, I also didn't understand what is the query.
This simply reads your
No,
books
he
of
is
account.
answering about capital account or machinery and all. You can pick.
Okay.
His view is given.
Okay. Please educate us on the NRE account and NRO accounts, and it is permissible transactions.
So what is NRE and NRO account? Transactions from this?
Yeah,
He is
what
asking NRE and NRO. He is
Hmm.
asking educate us between NRE and NRO and also permissible transactions.
See, NRO is considered to be like our SB account, saving bank account. Okay, so fund lying in NRO account cannot be remitted outside India under normal situation, but recently RBI has given permission to remit up to 1 million. So up to 1 million, if fund is lying in NRO account and if you want to transfer it outside India, then subject to payment of taxes and 15 CACB by the CA, it is permitted to be remitted outside India. But fund lying in NRE account is fully repatriable, physically accounted in India, but it is considered as if it is outside India, and even millions of dollars lying in NRE account can be remitted outside India without any restriction.
A resident can pay to NRI's NRO account not to release the purchase from NRI.
answering to NRE, NRO, you can go.
Yeah. Okay. If a company proposing to issue the shares for an CCI card holder who is actually providing the services to the company, issue of the shares on the consideration other than the cash.
No, it is OCI. If a company is proposing to issue shares to an OCI card holder,
OCI card holder, yeah.
Who is
providing the services
I will
of
complete it, Mr. Bala. If a company is proposing to issue shares to an OCI card holder who is providing services to the company, issue of shares for consideration other than cash, whether this transaction falls under capital account transaction or current account transaction, whether this proposed transaction requires specific prior approval of RBI.
It is a capital account transaction because he is acquiring shares. First transaction, it is current account, but second transaction is capital account. He is acquiring shares of Indian company. No?
Yeah.
You'll have to comply with all the formality, FDI formality.
Yeah.
But nowadays, the Dubai builder gives a scheme of 1% monthly payment for the total property cost. Example, he has given some name, number. So can NRI individual living in Dubai purchase such property?
In NRI, there is no restriction on NRI acquiring property in Dubai. The restriction is on the resident. If NRI can acquire, there is no restriction at all. FEMA doesn't apply to NRI.
Okay. The question is that property is in India, whose owner is actually an NRI. A resident individual wants to purchase his property, how and whom they can make the payment of this property, as the property value is about 10 crores. Can a buyer make a payment to NRI, receive the account in India, or will US limit triggered in payment is made to NRI account?
No, Mr. Bala, the question is, can buyer make payment to NRI's relative account in India, or will LRS limit be triggered if payment is made to NRI account?
LRS limit will not trigger. Even if property is of 1 million, so resident can make the payment to non-resident, but the payment should go in the an NRE account or NRO account of the non-resident. It cannot go to any resident's account.
Okay.
And this is subject to payment of taxes, capital gain tax.
Okay, next is
There is a
next
TDS in this. Yeah, there is a tax to be deducted at source in these transactions.
Yeah, 12.5% tax to be deducted. or else you have to obtain lower deduction certificate from the tax department.
Correct.
Next is the limit. You already answered this question, $250,000 that you have said actually. From FC filed through my period, is it physical form or in the or
Form
from its
FC.
AD?
No, Mr. Bala, Form FC is filed through any portal or
Acha, okay.
physical form
in the AD bank.
It is filed physically. FC is not online. It is physically filed to be the AD, and AD will forward it to RBI on RBI portal.
Okay. Can Pot, a citizen of the UK, develop the plots in India?
I'll take it, Mr. Bala.
Yeah.
I'll take it. Can POI, person of Indian origin, a citizen of UK, invest in developed plots in India through his mother? Any violation of FEMA provisions?
So he is investing in for acquiring a plot in India, and that is in the name of mother.
No, he's telling through his mother. But
through his mother, he is saying. He is using the word through his
name
mother.
of mother.
Through means who is there? He himself or his mother will be on that. I think mother can be. Through his mother is telling means he is making payment.
He can buy in his name, and he can also buy in the mother's name. If you make the payment on behalf of the mother, it will be considered as a gift.
If mother is a owner, it will be considered as gift if he makes payment.
Yeah. And if the value of gift is more than 10 lakh, then Form FCN is to be filed with the Ministry of Commerce.
Okay.
FCR, under FCR at 2010.
So as it is mentioned earlier that for capital account transaction, RBI is regulatory. For individual, any limit or anything, approval is come from the ministry, central government. The same way you have mentioned. Yeah.
Is it settled? It is a settlement of property. Okay, that's what he is saying here.
It's okay.
I don't know. Okay. Okay. What one should be actually when we observe differing practices among AD banks?
That is a $1 million question. Because if you go to one AD, he will give different opinion. If you go to another, he will give different opinion. You have to take your decision. You have to take.
That is what he is also saying here, that one body has accepted the board approval financial statement certified by the Indian CA, where the audit was not actually mandatory for that company, while the another AD bank insist audited accounts that may be actually by the on such cases. That's what he is saying actually.
No RBI clarification. That's why I said that we have to deal with authorized dealer with the rules regulation study.
Okay. If the foreign company has taken Indian share, if the foreign company has Indian shareholders, do we have to file any return in India?
Foreign companies?
If the foreign
company has Indian shareholder, do we have to file any return in India?
See, when resident acquires the shares of the foreign company, resident has to file Form FC with the RBI, and RBI will allot you the unique identification number. Then only your transaction can be said to be regularized. If that is not done, that is in violation.
No, here the question is the foreign company as Indian shareholder, do we have to file any India? That means the Indian shareholder who has actually invested, they have to comply with the requirement, not the foreign company.
Correct.
Because foreign company, the foreign rules will applicable.
Foreign company is not supposed to file any return in India because ignorance of law is excused. They are in foreign, they are not aware of the Indian law.
Correct, that is right. What are the rules through which the NRI can invest in Indian property?
NRI, OCI can invest in any commercial or residential property in India, but they cannot acquire agricultural land, plantation, farmhouse, etc. That is the restricted, prohibited items. Property, there is no limit. You can acquire a number of properties, commercial, residential, etc.
If you buy property under LRS, it creates the assets outside India. Is it permissible under FEMA?
Yeah, within LRS it is permitted. It is a capital account transaction, but within the permissible limit, then it is allowed.
Is there a need for execution of the gift deed? Yeah, if you are transferring gift deed is required. Without that, there is nothing. No property gets a transfer unless the document is executed.
Sometimes if a dispute arises, then the question arises. If you have not done the gift deed and some dispute arises later on, that time is questionable. That is why it is advisable to go for the gift deed.
Okay. 2,50,000 again limit you already clarified, there is no problem. Okay. In case of the gift deed, the non-resident is alerts asset in India, then it's a capital account transaction.
What did you say?
In case of the gift deed for the non-resident, it alters asset in India, then it's a capital account transaction.
No, what is the transaction exactly?
I really do not know. He say only gift deed.
He's
If
telling.
it is the gift, yeah.
He's telling, in case of gift deed for non-resident, it alter assets in India. Then it's a capital transaction.
I
No,
didn't
sir.
understand the
Dipti,
He's telling that properties in India, I am overseas. So for non-resident, it alter assets in India.
how can the gift alter the asset in India? Because
No. See, non-resident has got a property in India, whether he sells it or gives it, it is a capital account transaction because the property which was there in India, that is now being sold out, na? So your asset will reduce, na? Whether it is a gift or sell, under both the situation, it is a capital account transaction and you have to comply with the formalities.
So that only is telling, because you are telling no gift date,
It
limit.
seems like that. It is the question is not clear, but meaning seems like that.
Okay. There is a next suggestion has come to Dipti. Okay, they are saying that upcoming webinars, please discuss about the different
when
reporting.
we take series, we will take this all.
That is what they are saying. Whenever there is a doubt about any applicability of the permission of any government, etc., can one approach the return to RBI? Yeah, you can always consult to RBI. RBI is always helpful. RBI will definitely is friendly nature. That is the experience what I heard. Even Sudhakar also said that actually.
That was
Naren,
earlier, Mr. Bala.
Yeah.
RBI is very cooperative. RBI is very cooperative, non-corrupt, very good department. But if you raise any question to RBI directly, RBI don't reply. You have to go through AD only.
AD only.
You first convince AD and AD is convinced and AD will forward it to RBI. But which may take a very long time. Sometimes it takes 2 months.
Yeah.
It's not that easy. You just give the question and within 3 days they will reply.
RBI is non-approachable, Mr. Bala. Now it is through AD only now.
Okay.
We are not
payment of the yeah. Yes,
we are not allowed to approach RBI directly nowadays. Earlier it was there, but now it is strictly through AD only.
Yeah, earlier I think we can take an appointment, we can meet them. I used to go actually.
Yeah. I used to go to RBI many times earlier, but now it is not allowed.
Okay. Payment of the dividend by domestic company to NRI. Have to take any permission of RBI? I think dividend we already covered. There is nothing. Dividend he said
no permission is required. No permission is required. Our company has to fill up one form, RCD2. That is required by the company.
In the matter of the difference of the resident and non-resident, how is actually intention to stay is important. In the matter of the definition, resident and non-resident, how is intention to stay is important.
See, intention is suppose a resident of India, suppose student from India goes to US for study, and suppose he marries to a green card holder girl, then it is considered his intention is very clear. He wants to stay over there. That is why he married a green card holder. Such things can be treated as intention. Suppose the son is living in USA and parents goes to USA to stay with the son for a long duration. That is the intention to stay over there, its son. That is the intention.
ECB loan is availed by the company and complied initial compliances, annual returns and interest and the principal dues are not complied as per the ECB agreement. AD did not take any action despite complaints by a lender. What is the recourse to the lender, please?
See, if you want to extend the period, suppose you take an ECB and payment is to be made, say, within 2 years or 1 year or so, and if you cross that date, then you have to apply to the banker, RBI through banker by filing from ECB with the consent letter of the foreign lender. Okay, if foreign lender agrees and gives the consent letter, with the consent letter, you can give an application to RBI to extend the period. That is allowed. Otherwise, it is a violation.
If a NRI gives a loan or advances to his relative resident for doing a business, is it allowed or permissible permission is needed.
This is a very problematic transaction nowadays. There is no clarity at all. Relatives say that it can give the loan, but non-relatives it is very difficult.
Can an individual NRI construct a commercial
1 minute.
building in
The
India?
question was for relative only. So relative it can be given.
Relatives are allowed.
Yeah. Okay.
Can an individual NRI construct a commercial building in India?
Yes, allowed. No problem, no problem.
Agriculture property.
Not allowed.
Not allowed.
Agriculture not allowed. That you said. Can a foreign holding shares of the private company transfer shares of the foreign trust? Is it reporting required?
Shares of Indian companies held by?
No. Can a foreign resident holding shares of a private company
Indian
transfer
company.
share to a foreign trust? Is the permission is required?
No.
RBI permission not required.
Reporting. Can a foreign resident holding shares of a private company transfer shares to a foreign trust is reporting
Understood.
required. So
It-
private
it-
company in India, we
No,
presume that.
No, it is actually from foreign to foreign only. No, one foreign transferring to the
But
another foreign.
private
Say-
company is telling.
Shares of Indian
Yeah.
company held by non-resident and it is being
Covered, it
transferred to
required.
the trust, which is also a foreign trust.
Yeah, it
But
is foreign to foreign, no?
So
No,
that
but-
nothing is required. Nothing is required under FEMA.
Yeah.
But intimation to RBI is mandatory because later on when trust tells the session, it can cause a problem.
They
Under
see
FEMA,
the shareholding intimation is normally required everywhere. That is there actually. But here the transaction is actually between the non-resident to non-resident. So I don't think there is anything will be
but
there.
1 minute, the shares of a private company, which is in India.
Yeah, okay. It is India, okay. It is already held by the foreign, no? The owner is the foreigner. He is transferring to the foreigner, no?
see under FEMA, when there is a transfer of shares of Indian company held by one non-resident to another non-resident, under FEMA there is no formality, no FCTR has to be filed, but we suggest you give intimation to RBI because in RBI's record the name of the original seller is there and the name of the new transfer is not there. So it is we suggest you just give a letter to RBI. That's all.
Correct.
Okay. Does a receiving private placement investment in India from the foreign entity or non-reported or report basis need opening separate designated account for receiving the foreign currency or separate designated account for receiving the Indian currency from Indian investors?
See, non-resident NRI OCI can invest in Indian companies on repatriation as well as non-repatriation basis. If investment is on repatriation basis, then RBI formalities like filing of Form FCGPR etc. is required. If the investment is on a non-repatriation basis under Schedule 4 of NDI Rules 2019, then no formality is required, but we have to see the activity in which the non-resident is investing in Indian company, that should be permissible activity. Certain activities are prohibited. Only that is the thing we have to take the care.
Can the resident purchase the property in Dubai? That I think you already answered. You have taken the loan when I was there. Okay. No one is interested in the answer. Okay. Is there this you already answered here? If an Indian company provides the loan to the foreign subsidiary while paying the interest, say after 1 year to the subsidiary, will there be any reporting requirement with RBI?
See, Indian company can give loan to the foreign subsidiary only if Indian company has made investment in the shares of the foreign company. Okay. But nowadays it is mandatory to enter into an agreement with the foreign company, rate of interest to be specified and rate of interest should be at arm's length. Suppose the India you are getting 10% and if you give to them at 5%, that is not allowed. You have to benchmark the rate of interest. It is allowed. And interest payment can be made after 1 year as per the agreement. That is not a problem.
An individual is actually traveling outside India for a period of 30 days only on a work visa that is actually extends for 1 year. He intends to come back upon completion of the 30 days and may not go outside India again on that work. So questions, does he need to disclose anything under the FEMA or any authority before leaving India for the 30-day period, assuming that open the NRI account in India before leaving or country, or if he does not to make any disclosure and later does not return to India again during the financial year, resulting a stay outside India for more than 180 days, what are the implications?
Nothing is required. Nothing is required. He did not. He is not required to convert his SBI account into NRA account because he coming back after 30 days. There's no point in allowing.
Okay.
Only he can
But
open
second
account in
question,
host country if required.
but
Okay.
his second question, if he does not make any disclosure and later does not return to India again during the financial year, resulting in a stay outside India for more than 182 days, what are the implications?
See, if he is sure he is not going to come back to India, okay, then afterward he can convert his local account, SB account into NRO account. But there is no any time limit specified under the FEMA that once a person becomes non-resident, he will have to intimate to bank within certain number of days. There is no requirement. Once he is sure he is not going to come back to India, he can convert his SB account into NRO account. But even if there is a delay of such 3 months, 6 months, 1 year, nobody bothers.
Great.
When you sign an agreement, then a liability in the credited payable over the
No,
period
I
of 3 years.
Mr. Bala, when you sign an agreement, then a liability is created payable over next 3 years. So isn't that a capital account transaction?
See, you talking of the property?
I think so. You said no in
See,
the
resident is acquiring property, okay? Now question is, if the property is under construction and payment is to be made over a period of 2, 3, or 4 years, and accordingly, if you make the remittance within the limit of 2,50,000, it is not creation of liability. But if builder gives you the possession immediately, and balance payment you have to make over a period of 2, 3 years, then it is a creation of liability which is not allowed.
okay.
Can a resident individual Indian can acquire agricultural land outside India?
If the law of the host country permits, you can acquire.
Okay.
Because it is the law of the host country which allows you to purchase or not.
What exactly mean by the investment on non-repatriation basis? If investment made on non-repatriation basis, can it be later converted in the repatriation basis if the government has brought the sector under 100% automatic approval route?
See, investment and non-repatriation basis means the non-resident has got fund in NRO account which is otherwise not repatriable outside India, and he invests in any Indian company, business of which is fully permissible because certain businesses on non-repatriation basis also not allowed to non-resident. If he has invested in such some company whose business is permissible, okay, he can invest and he can retain the investment, but the income on such investment is fully permissible because it is a current account transaction. Even if the original investment is on non-repatriation basis, income is fully permissible, subject to payment of Indian taxes.
What are the sources and order to understand the FEMA? I think FEMA has got a site. The orders are actually published there. Whatever is there, you can visit the site. You can actually go through that if that is the case. Okay.
It's a bit
LRS topic. When there is a remittance of LRS to open the foreign bank account, if the same is not utilized within 6 months, then same has to be brought back. That means the bank minimum balances and much required minimum balances amount is kept in the account. Is there any exception to this, or can investment bank, that is FD, is actually allowed as there is no need to bring back the money within 6 months? Question number 2, if under the LRS, if the Indian bank has proposed to declare investment securities mutual fund, but can the part of this be used for the travel, education, medical claim available in the balance account? It has to be brought back to fresh funds under the LRS to be sent. This is the loss of the Indian resident and forces the bank charges, which is a profit for the foreign bank.
It is query or is thing? Is it a law?
See, resident who is remitted under LRS, then fund has to be used within 180 days for any investment for the purpose for which it was remitted. If he fails to invest within 180 days, he will have to bring it back to India. If he plans to make FD with that foreign bank, that is not allowed. FD is not allowed. You have to bring it back to India within 180 days or you have to invest anywhere. for property, shares, securities, anywhere.
Should we do a valuation of the equity shares before acquiring the foreign shares by an Indian company?
If it is a new company and his name of the Indian investor is already there on the MOA of the foreign company or equivalent article, equivalent documents over there, then valuation is not required. If it is an existing company, suppose I am acquiring the shares of the existing foreign company, then valuation is mandatory. Because under FEMA, when I am acquiring the shares of the foreign company, I cannot pay more than the fair market value. So the fair market value is $15. I cannot pay more than $15 per share. I can pay less than that. That is allowed under FEMA. That is why valuation is required.
Someone is asking, sir, can you please clarify once again the resident and not resident status?
What clarification you want? See, person is resident provided he was in India for 182 days or more during the previous financial year. Suppose we are in 26-27. So he has to check the status for the 25-26. If person was there in India for 182 days, then he is a resident. Okay. But if he leaves India for any of the three purposes, business, employment, or any other purpose, intention indicates to stay outside India, then day one he leaves India, he becomes non-resident. Even if his stay was India was more than 180 days, 2 days, but during the year he leaves India for taking up employment, business, or third purpose, any of the three purposes, then he becomes non-resident from the day one he leaves India. That is for the resident. And if a foreign person, not a person who is outside India, he comes back to India for any of the three purposes, then he is a resident from the day one. But for acquisition of property, they put a condition that his stay in India should be more than 182 days. Otherwise, he doesn't become resident of India. So normally, when a person comes today, then he doesn't become resident of India today. Next year, he becomes resident of India.
Dipti, we have another 5 minutes to go, but I can see down there is a message showing about 68 new questions are there.
Oh, 68 questions.
Yeah, that is what it shows here. I don't think most of the questions are actually beyond what we have actually discussed. I don't think we should be able to do that actually. That's what I think.
I think they can drop us a mail and then
we
can
are also
respond.
happy to respond.
We can be, we can respond to them. That's okay.
Take for 5 minutes. And then,
Okay.
Yeah. Or what we do, we allow people to speak for 5 minutes. What we do?
Yeah, I think that is what better. I think.
Yeah.
That is what it is better. Yeah.
Friends, all your questions up till what we answered, we will take it note down and we will answer it once it is our webinar is over. If more questions are there, we will cover that also. Give us a time. Next week we'll answer the question, our panelist, and also if required, we connect to our presenter and panelist again. Okay. And now we are open forum for speaking and asking questions directly. So anyone wants to speak, please raise the hand so we allow you to speak.
Yeah, I can see actually 2 hands are actually risen. One is actually the Sandeep. Another thing is actually, I think, Ravindranath and Sandeep. More hands are risen. Yeah, any one of you can unmute and speak.
Mr.
I'm
Sandeep.
Yeah. Chartered accountant. I just wanted to know about the issue I had posted, but still it is not clear to me. If a resident in India who is having overseas relatives like a son or maybe like a daughter who are settled outside India, if they want to gift a property to their mother and they are putting money from their own pocket and this Indian resident is not remitting any money, would she be allowed to acquire this residential property outside India, or it would be restricted by any FEMA regulations?
See, what I understand is mother is resident of India and son or daughter is outside India, and the son or daughter wants to buy property for mother. So they will be remitting fund to mother and mother will buy, or they will buy property in India and then gift it to mother.
No, they are buying property outside India, say in Dubai or Singapore, as you said.
Okay, they're buying outside India. Okay.
But the property they are not buying in their own name, because the only reason being, if they purchase in their name and then they give them that means double stamp duty and all these things. So they just want to gift money to the mother's account, which would be opened outside India, and from that payment can be made to the seller directly. So would it be a permissible transaction, or we need to apply to RBI for some approval or something?
It means they are buying property for mother, suppose say in UAE. Okay, for example, they will open the account and buy the property. I think that is not permitted. Because resident has to remit from India only.
No, what is the
So
situation?
real route is that
It is not
son or
purchased.
daughter should make the remittance to mother's account in India and mother should buy the property from LRS.
Well, that is a limit of 250,000 that there is no property available outside India in this amount. So the only idea could be these person can gift the property to the mother. They can just enter into a buying agreement with the seller, and the registration is done in the name of the mother. Would it not be considered as gift to the mother?
See, if the property is in the acquired in the name of mother, then it can cause a problem. So far as the mother's ITR return is concerned in India, because they may raise the question. If property is in the name of son, daughter, then it is okay. Mother can use it.
No, the idea behind simply is proper. They want to give to the mother because they feel they had, because of the hard efforts of their mother, they were able to settle and do good in life. Now they want to give this property by purchasing a property and in the name of the mother. They are not not even a single penny being sent from India. The property being gifted to the mother by the children by buying the property directly in her name. So they are making payment from outside India to the seller outside India.
It is a
Only
dicey situation.
See,
See,
the
what I
law is
suggest is,
the law is very clear. The person who's making the payment, he is going to be the owner. In
yes,
this case, you are saying that you are going to make the payment, but mother is the owner. If I understand the law correctly, the person who's making a payment, he is the owner.
see that's a
That is
deemed
where
owner.
Yeah,
that is where the law stands.
Registered owner and
let's
this will be
short this 1
yeah.
minute. So whether it, so he is telling that I am giving, the kids are giving as a gift to mother. And
That's
what
right.
is it permissible? To which our panelists say it's a dicey situation. He doubts this. Am I correct?
Yeah,
yeah,
you have to buy it in your name, you have to gift it. That is the only way. But the
yeah.
only thing, as you say, stamp duty, etc., another thing and all. Yes, stamp duty is actually in the case of the gift. In much places, it is actually
Mr.
varying it. That you have to check.
Let's take,
Yeah.
so
See,
it is not
if son or daughter directly buys the property in her or his name over there and then gives it to mother, then it is a considerable situation. But if they make the payment and buy in the name of mother, it is not a very dicey situation.
okay. Next.
Yes,
Sense.
Ravindranath, you can
Yeah.
talk.
Good afternoon, sir. Thank you for giving this opportunity. I have two questions. The first question, in fact, I have sent it, but it was wrongly understood. In fact, I was asking for the lender's point of view. In case the default is done in filing the whatever forms required and non-payment of principal dues and interest by the borrower in ECB case. So that was answered for extension of the time for ECB. I am not looking at extension. I am looking at the non-compliance by the borrower in India and what is the recourse available for the lender.
Okay. So lender has given ECB to Indian party. An
Correct.
Indian party failed to make the repayment on timely basis. Correct? That's your
Correct.
question, no?
Correct.
So legally, then lender can take an action against Indian party.
So
And
under
That is a
FEMA,
legal question.
under FEMA, anything under
It is a
FEMA.
violation. It is violation under FEMA. Unless you take the submit application for extension, it is a violation.
So under FEMA, what is the legal recourse I have?
See, legal recourse means ultimately you are liable to make the payment. Matter will go to court.
so under court, it will be under legal recourse, the lender can recover as per Indian law. And if amount is more than 1 crore, file under IBC, the company will be under.
Fair. So under my question is under FEMA, there is no recourse. FEMA will not help me.
It is a violation of FEMA. Matter is over. Na? If you fail to make the repayment, it's a violation of FEMA.
So Indian company will face
Recovery is a legal matter. Na? Legal matter. You have to knock the door of court.
The moment what happens is the moment the recovery comes, it goes to the court directly.
Yeah. FEMA doesn't come to the picture.
Yeah, it doesn't come to the
Right.
FEMA.
Thank you.
Yeah, you'll have to go to the court, you'll have to go.
Yeah. Sir,
that is
second question. In fact, one Dubai-based company has invested in the Indian company, which is a 100% subsidiary. So because it's 100% subsidiary, Dubai company has paid the entire subscription money, 100%. And for the sake of the second shareholder, one shareholder was also put as a nominee or the second shareholder. But he has not paid any amount. But when I am filing the FCGPR form, the banker is asking that to have to give the KYC of this nominee shareholder, for which the banker is not ready to cooperate. So, because entire money is paid by Dubai company, is it sufficient if I give the only KYC of Dubai company, not the nominee shareholder?
See, under Companies Act, you must have submitted nomination form, correct?
Correct.
Okay. If you give that copy of that form and a letter from the Dubai investing company stating that he is so and so XYZ is a nominee shareholder and remittance is made by us, I think then banker should allow you to go ahead. Who is the banker? Which bank it is?
The Axis Bank.
Axis Bank. Axis Bank is very problematic sometimes.
Even under the Companies Act,
Dear
you would have
panelists,
in the
dear
Companies
panelists,
Act.
I have the same query regarding this. So our AD banker is HDFC Bank. They are not allowing, even we have given the NOC from the nominee shareholder and from the remitter company also. They are not accepting. They just adamant to have the 6-pointer KYC from the nominee, from the nominee's banker. And they are not allowing us to give the nominee 6-pointer KYC as there is no remittance from his personal bank account.
So I will give you a practical solution. Ask
Yeah.
the individual to remit say $10 in the account of the Indian company. Okay. Indian company will issue a 6-pointer KYC on the basis of receipt of this $10 and accordingly you submit it. There's no other way out.
AD, see, friends, when AD says that I want it and legal it is not required, practical solution can be given, otherwise no solution. We
That's
face
what,
some,
ma'am.
I know, we all face this. Yeah, next.
So I just want to answer on that. Under FEMA, what happens is if the AD bank is refusing certain transaction or is not willing to undertake any transaction for you, ask that in writing from them.
They will
Once you
not
ask,
give. They will not give.
generally, yeah, I know, but we have had these kind of experiences in our banking career. And you obviously request in writing that we need it in writing. So once you do that, their opinion also changes at times. So
Sometimes, not always.
But
Sometimes.
if they know 100% they are sure, probably they would also try to give it in writing. So I think it's better in such cases ask the AD bank to give you in writing, and after that you can check with whether that is actually correct or it's not correct.
Yeah, we have to be fast because there are so many hands.
Yeah. Sunil, can you
Yeah,
talk?
I am Ravi Kumar. Last time, hello.
1 minute, Mr. Naren. Till how much time you have available? Another 10,
How
15?
much time it will take? 10-15 minutes?
2, 4, 6, 9 people. 9
We'll
people are there.
complete it in 15 minutes. We'll go fast,
Yeah.
little fast.
I am Ravi Kumar. Last time, yeah. Good afternoon to you. You had asked me to speak, but the
Mr. Naren
other
only
people.
will speak. Okay. Yeah, Mr.
Yeah.
Ravi. Go ahead.
Hello. Good afternoon. I am Ravi Kumar. Last time Bala sir asked me to speak, but someone else intervened.
Yeah.
Now I have a peculiar situation, but now of late I'm not facing this problem. We are running an NGO where under FCRA we get remittances quite often. We used to get. Now we have to open with State Bank of India in Delhi. That is not a problem at all. But IDBI Bank those days used to ask us to sign a nil undertaking under FEMA, which we refused. We said we are neither exporting service or goods. Why in FEMA is not applicable, we are given in letter, but still they wanted us to sign the nil undertaking. If I write as a 11th point that FEMA is not applicable, that they were not accepting at all. They say you sign our standard form with no writing, overwriting, nothing of that sort. I had to complain and I had to shift the bank now. But is it possible for a FCRA approved NGO, not a FEMA, not applicable, can the bank insist on a FEMA?
You have to go to ombudsman of the bank, concerned bank. There is no other option.
I had been to the executive director also, to IDBI. They said, no, this is our format. You sign. No, what is the problem? There's no. I said, why are you
You
increasing unnecessary paperwork for
Sometimes
us?
this happens. This is only
Sir,
very
you find the solution, you change the bank.
Yeah, I changed the bank, but now State
That's
Bank
all.
of India has come. So
Yeah,
one
yeah.
more thing I want to ask you: we as general resident public, we travel abroad, Singapore this year, next year to, I mean, last 2 years to Dubai, Dubai, wherever. We come back with some foreign currency, unspent foreign currency. To how much extent we can keep unspent foreign currency? We hope to go next year or the next few days, next few weeks, next month. We don't go at all for last 5 years. How much foreign currency like this can we accumulate in our home?
$2,000, 2,000 USD equivalent to 2,000 USD you can retain, and coins without any limit you can retain. That is the notification. I think 8.
Sir,
Retain permit.
sir, please repeat, sir.
$2,000 equivalent to $2,000. You can retain foreign currency in India if you are planning to make a future visit in near future. Okay,
2000.
and
Okay.
coins, unlimited amount of coins you can retain.
Oh, unlimited coins we can keep. Okay, sir. Okay, sir. Thank you
Very
very much.
practically not possible.
Thank, thank you, sir. Thank you.
Okay.
Next.
Yeah, next, Sunil.
Yes, sir. This is Sunil Kedia from Surat, Chartered Accountant. So I have a question that a resident invests in a private limited company, which in turn, Indian company, in turn invest in the foreign company. So whether ODI regulation will be applied in that case?
See, what I understood is resident is investing in Indian company and that
Yeah.
Indian company invests in a foreign company, correct?
100% foreign company holding is there in the.
FC, OI compliance is required, without which it is violation. You have to file from FC and all required document, obtain UIN number from the RBI and
Some
regular transaction every year. You have to file FLA as well as APR. These are the compliances required.
But there are some changes in the RBI last year that the FEMA guideline, like for this purpose only. So many investors are forming company in India to get the Indian money, that AFI or the whatever money, and then they are investing in the foreign, and they are not
I didn't understand. See, your question is Indian company is investing in a foreign company, correct?
foreign company.
Okay.
My
So
question is,
Indian
I'm
company,
investing in an Indian
so
company.
see,
My
whenever
question is,
Indian
I'm
company
investing
invests in
in
a
Indian
foreign
company.
company, it has to file FC form.
No, but I'm investing in the Indian company only. Then also.
I means who?
See, if individual is investing in Indian company and that Indian company is investing in a foreign entity, correct?
Yes.
Okay, then a foreign Indian company who makes the investment in foreign entity is required to file from FC, obtain UNI, and then every year
Okay,
file
whether the
FLA, APR, and many compliances are there.
Whether the individual who is investing in the private limited company required to follow that ODI guidelines or not?
No, there are two questions here.
No,
One
no,
is
no. Mr. Bala, one
in,
minute. His question is very clear. I'll make it. Resident Indian is investing and he is almost 100% shareholder. That company again invest in overseas. So, of course, the company has to comply FEMA requirement for that you mentioned. He is asking whether Indian shareholder who has almost 100% shareholder in that company has to do that compliances of overseas investment. Answer is no, right,
No,
Mr. Nair?
not
yeah,
at all.
answer is no, because it is Indian to Indian. Transaction is Indian to Indian. Nah? That is
Okay,
what I
Mr.
said.
There may be thousands of shareholders. Each and every shareholder is not required to file any compliance with the RBI. No, that is a not
Yeah.
logical question.
Correct.
Okay.
Yeah. Bhavna Singh. Bhavna Singh. Bhavna, you are there?
Yeah, she's speaking.
Yes, Bhavna. Go ahead.
You are unmute. Tell me, Miss Bhavna. Okay.
Okay, Abhay.
Stay, Abhay.
Yeah.
Mr. Abhay? By mistake, I think. Mr. Shreyans?
Okay. Shreyans.
Hello.
Yeah.
Yes.
Good afternoon, sir. Actually, I had a question that if a salaried individual is now investing in some US stocks and UK stocks, so just any A2 form or some form is required to be filled out, or just the disclosure in the ITR FA schedule is would suffice?
What is the question?
No, the
Can
question.
you repeat the question?
Yes. The question is, a salaried individual is investing in US UK stocks, listed stocks, And so, would the disclosure in ITR FA schedule suffice, or is anything additionally required to be done from the client's end?
Indian salaried person is investing in a foreign OPI, na? Portfolio investment, na? It is not private investment.
Listed,
Investment in foreign company is listed or unlisted?
listed.
Okay, then it is only OPI. OPI compliance is required, nothing else. You just report in FA schedule and that will suffice.
Okay. Nothing under FEMA.
No,
And,
no filing under FEMA is required.
okay. Thank you.
Okay.
Next is
Srinivas Rajesh.
Good afternoon, sir. Hello.
Yes.
I am Srinivas, sir.
Yeah.
Good afternoon, everybody. Sir, Indian listed company has borrowed GDRs in 2007, sir. Still, it has not paid. So, what are the consequences, sir? Is there a FEMA violation?
Indian companies borrow?
Indian listed company, they have raised GDRs of 50 million, sir, in 2007 for a period of 5 years. They have not taken any extension or anything. Just like that, only auditors and secretarial report, they are qualifying it.
That is a legal matters.
Yeah, it will be
legal matter. No?
Is
We
it
can't
punishable under FEMA, or if it goes to liquidation?
punishment is second thing. Money recovery is very important, na, for the foreign investors. That is a legal matter. We can't. Sorry.
No. Is it FEMA violation, sir? I am asking.
Yeah, it is a violation, na, because you are not complying with terms and conditions of FEMA. No?
Yeah, terms and conditions not compliant. It is a clear-cut violation, actually.
Earlier, Mr. A.G. Ravindranath Reddy ji also has asked the same thing, sir. I am there.
It is a violation.
Yeah.
Rajesh Desai.
Rajesh?
Yes, sir. Hello.
Yeah.
Good afternoon, sir. My query, there's a trust, Indian trust. It's a family-owned trust for the benefits of the family only, and it has only sole one beneficiary, who is an NRI. The trust has a property brought out of Indian trust funds in India, and it wants to sell that property. Now, if the property is sold, they are ready to pay the capital gains tax, whatever the tax is there, and the net proceeds after paying tax, the beneficiary would like to remit it to his own home country outside India. Can it be? Is it possible to remit the money, entire proceeds?
The amount is about to like 50,000 USD, no?
It will be around,
It requires prior RBI permission. There are two types of trust. Where the share of the non-resident holders is fixed and share of the non-resident is uncertain. Not fixed. Discretionary trust.
He is the sole beneficiary. It's a family trust. It's a family trust.
Yeah,
He is
I
the sole
understood.
beneficiary.
I understood. But it is a discretionary trust or non-discretionary?
Non-discretionary.
Then you have to take the permission. Initially, you have to take the permission of RBI at the time of formation. When the non-resident is a beneficiary, then you have to take RBI permission.
Next is
Manoj.
Manoj. This is the last
Hello.
one.
Yeah. Hello. Yeah. Thank you,
Yes.
ma'am. Just simple thing is now non-resident resident Indian mother of Indian private company shares she want to gift it to her foreign national daughter. So what will the provision? Whether it is allowed?
See, Indian company says held by resident Indian, okay, can be gifted up to 5% of the capital of the company or $50,000, whichever is higher. $50,000 is per year, but maximum you cannot give more than 5%.
That means
That is the
valuation
limit.
has to take place.
Anytime. The valuation, international means valuation is must.
Yeah, that is right.
Yeah.
Okay.
If the amount is small, then it can be acquired by the non-resident from the mother, and mother can gift it up to like 50,000. That is all right. But direct gifting is limited up to 5% or $50,000, and that is also with RBI permission.
No.
Thank you. Thank you.
I think there are three people or four people. You will
Five
take
people.
No, I think it will keep you.
Yeah.
I think
There's
we
a
can.
mo-
What
yeah.
you will do, Mr. Naren? It's
Yeah, let us
1:15.
go. We'll complete 5-10 minutes.
Okay,
Yeah.
fine.
Manoj, you can talk.
Now 6 people only. After that, no one else.
Yeah.
Mr.
Yeah,
Manoj.
yeah. Hello,
Yeah, I think
hello.
you are covered, no?
Yes,
Mr.
go
Manoj.
ahead. Go ahead.
Actually, second in same relation, non-resident Indian mother, and she is holding the shares of Indian company, private company. Can she gifted to the Indian resident?
That is allowed.
Allowed.
That
That
is
is
allowed. That is okay.
without any FEMA
Yeah, yeah.
provisions.
Yeah, that is allowed.
Okay. Okay.
It
And
is a
what
gift.
about the and if she is a director and the owner of the particular if she is a director and also a shareholder of particular private limited company, can she able to give loan to the company as a loan from director is allowed?
Company
Well,
is
the mother wants to give loan to the Indian company.
Not mother. If that particular non-resident Indian is a shareholder of the private limited company of India, and if she gives loan to the that particular private limited company, she is a director also. So, as loan from director is allowed as intercorporate deposit exemption, whether she can give the loan to the private limited company and what is the limit?
No. Under FEMA, it is not allowed. They have to borrow by way of ECB only.
No, but
Okay.
that
Even
is
if
in
it is allowed under
through.
Companies Act, but under ECB,
Companies Act is applicable to Indian directors and loan from in India. This is a loan for a director located outside India. So that's why it will
foreign
be
director is
considered
giving loan to Indian company.
by the
No,
company.
she's not a hello. She's not hello.
Yes, please.
She is a NRI and a director of a private limited company of India.
Got
So
it.
whether yeah.
Got it. The same answer is same. Mr. Naren has said the
Okay.
same.
It is
Yeah.
considered
Okay.
as ECB only.
Okay. Thank you.
Yeah,
Thank you.
next, Girija.
Girija is there. Subhash is there. Abhay is there.
Yes, sir. My name
Yeah.
is Girija.
Yeah.
Yeah, ma'am. Good afternoon, ma'am. Good afternoon, sir.
Good afternoon.
So I have a question. The Indian director has incorporated company in Oman in India. Both the companies are in the same name. Now both the companies are having the same object business activity, that is exporting of the goods and also providing construction services. Now the question is that now the goods which will be exported from the India to the Oman company, now whenever the amount which is to be remitted to the Indian account, whether the company has to open the NRO or NRE account, or whether the Indian director can open the account in his name and take the income from the Oman company.
See, when Indian company exports the goods to Oman company, then Indian company has to receive the payment within 9 months in Indian company's account. That's all. That is the compliance under export of goods and services notification.
Okay, and it will be current account transactions, no, sir?
Yeah, current account. Company is exported also, it should come to the company's account.
But and the Indian director is of the view that they want to keep both the accounts separately. But how can they keep both the accounts separately if he's going to do the export to the Oman company, and when the income will be coming from that company to this company?
See, export is by the Indian company to the Oman company, then money should come to the Indian company's account only. It cannot go to that or any other account.
Yeah, okay. Thank you, sir.
Okay, next,
Ashwin.
Abhay.
Ashwin,
Ashwin hand is not there. She has put
Yeah.
down. Now Abhay is there. Subhash is there.
Abhay, Subhash, and Mr. Ravi. 3.
Mr.
Abhay?
Abhay, you are there?
Yeah, you unmute and do it. Okay. Mr. Subhash?
Subhash, are you there?
Yeah. Good afternoon. Thank you. You have already answered my query. But then I have a little, which I have posted it. The non-resident individual who is a US citizen, he has got the 50% share in the Indian flat, along with his sister, 50% resident, she is resident, through a will. Now, if he releases, whether any obligation under the FEMA, if he releases his right title interest in that 50% in his sister's favor, whether he has to file or whether the sister has to file any form with the RBI. That's the query number one. Number two is that if he sells in the market, what are the disclosure obligations under the RBI, under the FEMA for him?
See, if the transfer is between two non-resident, then FEMA compliance is not required. Simple intimation to RBI is required. Okay. If he sells to any resident, then FCTRS is required to be filed.
But to be filed by the transferor
Resident
or
only,
transferee?
resident
Resident
only.
has to file. But if he
Yeah,
releases his right title in favor of his sister, he is a resident. Whether
that is okay. That is a transfer by non-resident to non-resident. No compliance and FEMA is required.
No, he's a non-resident. She's a resident. So
she is a resident. Okay. So non-resident is gifting his shares in the favor of resident.
Yes, gifting or releasing.
That is okay. That is allowed.
So
Because
any
it is
obligation,
coming from
any
India only,
disclosure obligations?
no, nothing is required.
It is a gift deed, na? It is a gift deed by virtue of.
See, एक minute. If it
No,
is
it is not a gift deed, it is a release deed.
Original investment was on repatriation basis.
No, this is, he got it through a will. His father was the owner.
The person who was a non-resident, original investment was by him was on repatriation basis in India or non-repatriation basis.
No, sir. He got it through a will.
No, it is the father's property.
Father's property.
Father's property. After the father is passed on, 50%
then
to
nothing
him, 50%
is
to sister.
required. Then it is okay. If it is a repatriation, FCTRS to be filed. Otherwise, not required.
Okay, thank you, sir. Thank you, Mehta and Mehta. It is an excellent thing platform you have given to us.
I think over now.
Yeah, Ashwini is there. Ashwini, Abhay.
Ashwin is there. No, Ashwin. Ashwin.
Can you hear me?
Yeah.
Hello. Whether Indian origin US citizen can buy the land, non-agricultural land in India without OCI card?
No, OCI card is must. He can buy land in India for construction purposes, not for agriculture purpose, but OCI card is must.
Yeah.
Now, but why purchasing there is no OCI card now? Whether that person can have OCI card, then sell the.
Yeah, he can apply for the OCI card and register it. That is okay. It is delay, but it is must.
Okay, thank you, sir.
Sir, good afternoon. My AD has been troubling me for the last 3 years. We are NGO. During COVID, we were as a relief agency, government approved relief agency. We imported a lot of oxygen related equipment during second COVID. As you know, it was allowed for free of this IGST and free of customs duty for usage by COVID hospitals, COVID patients, whoever we want to give, long COVID, post-COVID patients, we could give it free of cost. We imported from Germany, China, Singapore, but the payment was made by MNCs in India, foreign MNCs in India, their parent organization from London and Singapore, they made the payment. We got the equipment here for under the relief agency, what you call status. Now, my S-Bank, who is the AD, has been troubling us to file the returns. How did you pay the money? What is the payment? We have already replied that this is donation for us. Foreign companies have paid there directly to the supplier and we have only got the material here.
So Indian companies imported from the foreign company and payment to the foreign supplier is made by the foreign company.
NGO. Sir, we are an NGO.
NGO.
We are an NGO. We are a trust actually. We have an FCRA also. Whether it's FCRA or not, but we were allowed during COVID, second COVID, when oxygen equipment was very, very badly needed in India. We were allowed under government approval. If the government approves any trust, any NGO as a relief agency status, we got the relief agency status in Maharashtra. We imported equipment from that is oxygen concentrator, HFNC, and various life-saving equipment related to oxygen for the COVID and non-COVID patients whose lungs were affected. We were given this donation by the Indian MNC. They made the foreign parent company in Germany and USA to pay for it directly to the supplier. We got it free of cost. We imported it under free zero IGST, zero customs duty.
Listen to Mr. Naren. Listen to what he's telling.
Yeah.
Did you get any invoice from the foreign company against the import of the oxygen?
We got their letter of sanction that we have received this money and we are paying for it.
When foreign company, foreign MNC supplied you the oxygen, did they give any invoice?
They didn't give any invoice. But the bill of entry is in our name.
No, bill invoice was there. They had
No,
issued the
because
invoice.
money was not got into India. They paid it
So
directly.
invoice was not there.
See, there's no invoice in
No invoice.
customer accepted it, no? Then you are
I
not
just
required to pay
I
because
just
you're not
wanted to add.
MES.
I just wanted to check here. What about the bill of entry? Does it say free of cost?
Yes, it is free of cost.
Then
Otherwise,
it
we
is
would not
not
have got it.
required. Then
Then that should be sufficient. Then that should be sufficient for the AD to accept.
They have been troubling us. You give us
if
the
the
payment mode. What do you say? It's
value
already
mentioned in
delayed.
invoice is zero, na? Then customers cleared it. Then
Yeah,
we are
if
not
custom
required
is
to make
cleared,
any payment. And even
Yeah.
RBI bankers ADPMS record also it will not appear because payment is zero, no payment.
No, they have been reminding us regularly every 3 months, 6
No,
months.
but
They
you
have been
write
saying
to
you have
them.
not
You write
replied
to
to
them.
us.
You
You are
have to
not.
narrate the entire story and
it
write to
needs to
them.
be represented correctly. I think they will accept it.
Yeah, correct representation
Okay.
required.
Okay, sir. Thank you very much, sir, for this lovely meeting we had. Yes.
Mr. Abhay, Mr. Abhay,
Abhay and Subhash.
bas, that's all. Huh? Now no more.
Last
And
two
be
questions
fast.
only.
Abhay
Yeah.
and Subhash, are you there?
Or we will close.
I don't think they are there.
They are not there.
Yeah.
I think we can close. It's almost 1:30. We cannot extend. Mr. Naren, it was wonderful, wonderful. You can see the people were just throwing the question. Thanks a lot, Mr. Naren Kumar. It was wonderful to share your knowledge, experience with us. We're really proud to have you as a panelist. Thanks a lot for your time.
Okay, thank you very much.
Naren Kumar, I am personally.
It was far
Thank you
beyond my
so much.
subject. It was far beyond the subject of the day, but I covered everything. I knew that's why.
Naren, I am very personally thankful to you for a lot of things you have given the sharing. That is number one. Number two, I also wanted to tell you we had as high as 370 plus participants actually in this webinar, well attended webinar. Even at this particular time at 1:30, if you look at it, it is showing about 178 people.
I saw the figure.
That show the importance of the topic. That show your excellent sharing of the knowledge for which people are willing to listen and they wanted to add knowledge. That is the thing. Very, very thankful to you, sir.
Thank you so much, Naren sir. Thank you so much for accepting our invite.
Thank you so much
Bye.
for both of
Thank
you
you so
making
much.
an excellent presentation and putting the thing very nicely, explaining the thing for both of you. I must actually appreciate your nice presentation. Thank you.
Thank you so
Thank
much.
you so much.
Bye. Okay, bye.
So we close with this. Have a
Okay.
good day. We will meet next weekend, yet another session. Thank you.
Okay.
Mother.